markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. I'm Nathan Hager. We check the markets all day long on Bloomberg. Right now, the S&P 500's up 2 points. That's little change. The Dow is up 23 points, also little change. The NASDAQ higher by 30 points. That's a gain of 0.2%. So stocks are struggling to continue their climb after the latest batch of economic data. We got better than expected consumer confidence read from the Conference Board, and existing home sales jumped from a 13-year low. A lot of exuberance still baked into this market with the idea that the Fed could ease rates next year. The Fed's penciled in 3 cuts. But Jim Caron, CIO of Portfolio Solutions at Morgan Stanley, says he doesn't think the Fed will be easing until it gets to at least 4.
We look at nominal Fed funds today at 5.5%, and let's say U.S. inflation is at 3. That means real policy rates are at 2.5%, which means that the Fed could cut 100 basis points just to get to their neutral level. So I know we've been talking about that. Yes, there's like 6 rate cuts priced in, but remember, 100 basis points of those rate cuts is really just getting to neutral, and they don't start really easing until they start doing more than 100.
You can hear more from Jim Caron of Morgan Stanley on the Bloomberg Surveillance Podcast. Checking treasuries right now, the 10-year's up 5/30 seconds, yield 3.91%. The 2-year yield is at 4.39. NYMEX crude's up 1.2% at $74.81 per barrel. COMEX gold is down 0.25% at $2,047 even per ounce. The euro 1.0965 against the dollar. The yen is at 143.75. Continuing to watch shares of Paramount Global. They're up 1.2% with Bloomberg News reporting the company's in talks to sell its Black Entertainment Television Network to a management-led investor group. Biggest drag on the S&P right now is continuing to be FedEx. It is down more than 11% after lowering its sales forecast for the fiscal year. That's a Bloomberg Business Flash. Bloomberg Markets continues with Paul Sweeney and Emily Grafeo.
All right, Nathan Hager, thank you so much. We appreciate that. As always, Emily Grafeo, Paul Sweeney, live here in our Bloomberg Interactive Brokers studio. We're also streaming live on YouTube, so check us out there. Search Bloomberg Radio. Let's talk markets here, because this market has just been ripping here into year-end over the last 6 weeks. Again, the S&P, just since that October low, up a little more than 15-16%. Even the Russell 2000, that's really been the performance there, about 23-24% off of that low. So question is, are we pulling some of the 24 performance into 23? Are we too far over our skis? Let's check in with Thomas Martin. He's a senior portfolio manager at Globalt Investments. But of course, the highlight of his entire life was that he graduated from the Duke University. So we appreciate getting another Dookie in here to balance the UVA influence in this room.
I'm outnumbered.
Hey, Tom, thanks so much for joining us here. Did this kind of rally here we've seen since kind of late October? Boy, it surprised me. What do you make of it?
Well, the rally, just the fact that there was a rally itself didn't surprise, but the strength of it, and is sort of a delay, really. We knew that after July, you were going to get some chop in there and into November, but it's just been relentless and strong. And sentiment changed from bearish to bullish, and into the territory where it's really of some concern, but not necessarily a big concern as we get into the end of the year. And that may mute some of the returns of the Santa Claus rally. As you said, we sort of pulled some of those returns forward with this exuberance.
I also write about ETFs, Tom, and the S&P 500 ETF from State Street, SPY, had a record inflow on Friday. $20 billion of new money went into that ETF. What do you make of, I don't know if we can call it euphoria, but just the massive, I guess, cash flowing into equities right now, even after we've already seen this rally off of the lows?
Sure. Well, there was excess cash on the sidelines, a bit more than usual. And I think everybody was waiting for maybe that gets put to use. And as you start to position yourself for 2024, forget about what happens with the rest of this year. Where are you going to put your money? And with the huge run that we've had on the one hand in growth and in technology and in the Mag 7, and then on the other hand, with this fear that there's going to be either a rotation or a broadening of the market, where can you go to get the exposure that you want easily and quickly? And the S&P 500 is a good place to do that. I mean, the index itself is biased towards growth, but if you look at the year-to-date returns of the S&P 500 relative to, say, the Russell 1000 growth or the Qs, it really pales in comparison just over the last few weeks. And so if you don't want to take the risk of loading up on those aspects of the market, the growth area, right after they've run, and you want to have some exposure to a broadening market, the S&P ETF is a fine place to put your money until you figure out what you're going to do from there.
Hey, Thomas, what are some of the sectors that you guys think might be good performers in 2024? Do I follow kind of the Magnificent Seven, try to glom onto those, or do I try to maybe find some names or some sectors that really didn't really participate in 23?
Well, that is really the difficult question. And from a fundamental standpoint, and just meaning earnings growth going forward, is that the sectors that are up so much, technology and consumer discretionary, for two of the big ones, and then the telecommunications services companies or communications companies, that's where the growth is. It's just that the share prices have appreciated a lot. There's still a lot of issues out there with banks and with real estate. And healthcare has some issues associated with it, some of them political. So the growth is a little bit slower there. We still want to favor the sectors that have that growth. And I think what you have to do is just hold your positioning and not really try and trade around this, because it becomes very difficult. Things can remain overvalued for a long time, and then they can correct, and they can correct a lot faster than you anticipate. So we're advocates of diversification in this market and going forward in 2024, and staying invested and really not trying to time the markets.
So does that mean you're staying invested in the mega cap tech names, the NASDAQ 100, the NVIDIAs, the Apples, everything that has rallied so much?
Yeah, we're not, in other words, so we had everything we wanted. It's been very favorable for our performance. And the question is, do you trim that back? Or actually actively try and get underweight? We wouldn't suggest actively getting underweight. There is trimming to sort of rebalance a portfolio, so you can take a little bit of money off, but you still have the exposure that maybe you originally had, even if you were overweight that area. So you want to watch your weights, especially when the market moves so fast, because they can get to a more risky overweight than you want pretty quickly. And then it makes sense to pare those back. Of course, it's difficult to do that at the very end of the year and take big gains for taxable investors. So there might be some waiting until the beginning of next year. It'll be interesting to see what investors do with those investments and whether they do any trimming at the beginning of the year.
Hey, Thomas, 30 seconds. Fixed income, what's your 24 call here?
Well, we believe that rates will probably exit 2024 lower than they are now, and that we have seen the peak in rates at 5%. But here in the 4% area, there's still plenty of reasons why rates could go back up. We could get another inflation scare. There could be geopolitical implications. And there could be, again, raised fears about renewed Treasury issuance and the fiscal impulse.
Gotcha. All right, Thomas, thanks so much for your time. Always appreciate getting your thoughts here. Thomas Martin, he's a senior portfolio manager at Globalt Investments, getting his call on this market. Stay invested when it gets scary out there. Looking at the S&P 500 up just about 3 points here, so unchanged pretty much, and same for the Dow. A little bit of move higher in NASDAQ. We'll have more coming up. This is Bloomberg. Let's go to Elise Mateo for some company news.
Thanks, Paul. Expectations were high, but FedEx's profit fell short of forecasts, and shares certainly feeling it this morning. Bloomberg's Kriti Gupta has analyst reaction.
Are basically saying that there's a lot of revenue disappointment in their express business, which is really reliant on their own network at a time when they were really kind of amping it up. If you look at their ground and their freight businesses, profit beats, but it's the fact that their biggest business, the one that they really put their weight behind, those are the ones missing their revenue estimates, pushing the stock down.
All right, so how much lower is it right now? Shares of FedEx, they're down about 11%. Micron said to open its books after the closing bell. Bloomberg's Alex Webb says the markets are looking for more signs of recovery.
Almost exactly a year ago, Micron was cutting jobs by 10% in the fiscal year that ended at the end of August. They experienced a 50% decline in revenue. That was largely due to overcapacity in the memory chip industry as a whole. Micron was the first mover to really cut that capacity, but crucially, big competitors, SK Hynix and Samsung, did the same. That has slightly rebalanced the supply-demand equation in favor of these companies.
Now, but Webb says they're still looking at a $1 billion operating loss in this quarter. Micron right now down about 1.5%. An update to a story we brought you earlier. Apple, well, it's fixed an issue with its online financial services. Some users were experiencing outages on Apple's Card, Cash Pay, and Wallet. Apple shares, they're up about 0.1%. And Volkswagen is joining the list of automakers that are making their EVs compatible with Tesla's North American charging network. VW and its Audi, Porsche, and Scout brands will adopt the standard port starting in 2025. Those are the company stories we're following. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
We have these markets here. S&P, the Dow, pretty much unchanged when you look at the indexes. The Nasdaq's up about 0.3%. Yields are coming in just slightly, down about 2 basis points for the 10-year Treasury, 3.90%. Gold, pretty steady, $22,034 an ounce. WTI crude oil up 1%, $74.70 here. Let's get some world and national news right now. We'll do that with Scott Carr.
Thank you, and good morning. In an unprecedented ruling that's headed for the U.S. Supreme Court, the state of Colorado's highest court has found that Donald Trump is ineligible to serve again as U.S. president because of his insurrectionist actions leading up to the deadly attack on the U.S. Capitol in January of 2021. Colorado's Supreme Court barred Trump from the state's March 5th primary ballot, but stayed the decision to allow Trump to appeal, which his campaign says he'll do. If the Supreme Court decides to take up the case, the co-director of the Center on U.S. Politics at University College London, Julie Norman, tells us its decision will likely set in motion how other states handle the matter going forward.
Encourage, embolden other courts to rule similarly. Other states that have looked at this question, New Hampshire, Michigan, Minnesota, have not chosen to move forward with it. But I think that this ruling will open the doors for other states to say, okay, we have this precedent from Colorado. We can look at what their logic and ruling was.
The Colorado court directed its Secretary of State to keep Trump's name on the primary ballot until the matter is decided by the High Court. The U.S. and Venezuela have reportedly agreed to a prisoner exchange. Reports say Venezuela's agreed to release 36 people, including at least 8 Americans, in exchange for a close ally of Venezuelan President Nicolas Maduro. Reports say some of the Americans who will be released have been designated as wrongfully detained by the State Department. The Maduro ally being released by the U.S. is a Colombian businessman, Alex Saab, who was charged with money laundering in Florida in 2019. And the holiday song everyone loves to hate, Mariah Carey's All I Want for Christmas Is You, has claimed the top spot on the Billboard Hot 100 chart. Billboard says this song is the first to top the Hot 100 for the 5th year in a row. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg. Back to you, Paul.
Scott Carr, thank you so much. We appreciate that. Emily Grafeo and Paul Sweeney here. Coming up in the next hour, we're going to talk to Matt Palazzola. He's the insurance analyst for Bloomberg Intelligence. Why? Because there's an M&A trade in the insurance business today. Aon agreed to buy NFP Corp for about $13.4 billion in cash and stock as part of a push into the middle market segment of the insurance brokerage and wealth management business. Funds affiliated with Madison Dearborn Partners and HPS Investment Partners are the sellers, the company said in a statement Wednesday. The transaction will be funded by $7 billion of cash and $6.4 billion of Aon stock. And I like to look, when I see an M&A trade here, who the advisors are. So you go MA, go, and the financial advisors for the acquirer for Aon are Citi and UBS, and the bankers representing NFP Corp are B of A Securities and Evercore Partners. So again, another little spate of M&A right at the end of the year.
I feel like we've been hearing more about M&A. We had Occidental Petroleum, U.S. Steel, and this is after a long M&A drought, but maybe now starting to pick up. Yeah,
it's been, I was looking at the data, probably a week or so ago when we were talking about the U.S. Steel deal, and it's been, kind of the weakest year in M&A for, 8-9 years in terms of fees, and are kind of just looking to get the $3 trillion in M&A volume this year. But again, it looks like a little bit of a surge here at the end of the year. Aon expects to fund the cash portion with around $7 billion of new debt, according to a filing of plans for $5 billion of it to be raised in 2024 and $2 billion raised when it completes the transaction. The new debt will span a range of maturities subject to market conditions. NFP Chief Executive Doug Hammond, he's going to continue to lead the business as an independent, connected platform within Aon, reporting to Aon President Eric Anderson. So Aon says it expects about $400 million in one-time transaction and integration costs. A combination is expected to deliver earnings adjusted per share in 2025 and break even in 2026. Looking at the stock of Aon, it is off 5.5% here today, reflecting that probably that earnings dilution they're talking about on a year-to-date basis. It's pretty flat. So we'll talk to Matt Palazzola, Bloomberg Intelligence, in the 12 o'clock hour on this deal. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing? I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to break down those FedEx earnings. Lee Klaskow, he's a senior analyst covering the transports and logistics at Bloomberg Intelligence. He's going to be in studio. He's the expert there, so we'll get his thoughts on those numbers. Odetta Cushy is going to join us. She's a deputy chief economist at First American. She's going to join us to discuss the housing market and the outlook for rates in the economy. Then our retail outlook, here it is. It is this end of the shopping season coming up. Deborah Weinswig, CEO at Core Site Research, joins to give her 2024 retail consumer outlook. But first, let's kick things off with Charlie Pellet.
Hi, thank you very much, Paul and Emily. We have got stocks advancing again today with the Dow, the S&P, NASDAQ, all in the green. But first, a headline from the Bloomberg Professional Service. European Union finance chiefs have ended months of wrangling over fiscal rigor to agree to new rules that will rein in debt and define the bloc's ability to invest in key sectors such as defense for years to come. Treasuries are clinging to gains, stocks striving to hold on to a rebound after a fresh batch of data this morning left traders measuring the chances of a so-called soft landing for the U.S. economy. S&P higher by 4 now at 47.72, a gain there of 0.1%. The Dow, another record, keeps on going, up another 33, up 0.1%. NASDAQ 100 index up another 28, also at a record, up 0.2%. NASDAQ Composite Index up 44, up by 0.3%. 10-year yield 3.89%. The 2-year 4.39%. Spot gold down 0.3%, $2,034 the ounce, and West Texas Intermediate crude now at $74.57 a barrel, up now by 0.9%. This morning we got data showing consumer confidence as measured by the Conference Board rose to a 5-month high as Americans grow more upbeat about the outlook for the economy. Dana Peterson is the board's chief economist, and she was interviewed this morning right here on Bloomberg Markets.
Well, I think consumers are saying that inflation's not as bad as it was, especially gasoline prices. Yeah. They're also probably heard in the news that mortgage rates are down, and also the Fed's probably done raising interest rates. So I think a combination of those things really fed into consumer confidence in the month.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. So again, recapping here, equities continue to push higher. S&P up another 4, up 0.1%. FedEx cannot ignore that stock after earnings. FedEx plunging by 11%. Rival UPS down 1.1%. Whole lot more on FedEx coming up with our Lee Klaskow right here on Bloomberg Markets. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Emily Grafeo, Paul Sweeney, we're live here in the Bloomberg Interactive Broker Studio. We're also streaming live on YouTube, so head over to youtube.com and you can search Bloomberg Radio, and that's where you will find us. Need to make a quick correction what I said earlier. We will not be speaking with Deborah Weinswig, CEO at Core Site Research. Instead, we're going to chat with Matthew Palazzola. He's insurance analyst at Bloomberg Intelligence. We want to get his analysis of this $13.4 billion acquisition in the insurance space here today, so we'll do that. That'll be cool. Let's talk about these markets here. Charlie was just reporting a little bit of green, but not big movement here, but we welcome Bailey Lipschultz. He does this stuff. He covers all the markets for Bloomberg News, and he joins us here in our global headquarters studio. Bailey, what are you looking at here?
All the markets all the time. If the Dow holds into the green, we will have 10 consecutive days of gains, longest streak since July. I mean, I know people want to downplay whether the Dow matters or not. No S&P, no NASDAQ 100, but it's still fun.
I do it for John Farrow. I mean, he's a big Dow fan.
Yeah, print out the 40,000 hats. I don't know.
Yes.
I was told to never, ever mention the Dow. Pretend it doesn't exist.
Yeah, well, yeah.
That's here. That's the new guard. The old guard still cares. But looking at the underperformers, I know you guys are going to dive into it more. FedEx down 11%. biggest drop on an intraday basis since September 2022. Questions around its air units profitability, expectations on what the outlook brings. We are seeing weakness for UPS, so a bit of uncertainty around that print. Looking at the best performer, though, in the S&P 500, it is Alphabet, ticker GOOG or GOOGL. Yeah, Google. It's kind of like when people call Meta. It's really Facebook at the end of the day. Stock up about 3%. This coming after information reporting that Google is planning to restructure part of its 30,000 person ad sales as automation booms, so implementation maybe of that AI revolution, providing a bit of a boost for the shares. One company that is under pressure after earnings, General Mills, ticker GIS, down 2.6%. Volume recovery, growing sluggish, uncertainty around what people are going to spend money on. Emily, the thing that stood out to me, pet food, weak. And that's why we've seen this with Chewy, we saw this with Petco.
That's right.
It does seem like people are downgrading what they're buying their dogs in terms of food. I don't know if you have a 70-pound German Shepherd, how you really can't avoid feeding it, but it does seem like
Are you a pet person? Or
I'm a big dog fan, but I don't have one.
Are you guys going to get them? Because now you're in the burbs.
We're in the burbs now, getting married in June, so we have a lot of things going up in the next 6 months, which is scary. But yeah, I think post-July we'll get a dog.
What kind?
My fiance is allergic, so we probably have to get some kind of
we
doodle.
need to switch this out right away.
I know,
It's going to need really expensive food, too. I can just feel that.
And
You need a dog that eats kibble.
Well, I feel like also with the spending, I talked to Mike Regan. He's like, the amount of money I spend on my dog's haircuts is like far more than I pay, which in this economy is not ideal for anyone.
Are you a dog owner?
Well, my parents have a yellow lab, so but Penny just gets kibble. Like she's not getting any fancy food, and we do use Chewy.
All right.
You do use Chewy?
Yeah.
All right.
I'm not a dog owner, and we have a very, very angry pit bull in our complex. It's just not friendly at all, and his name is Harry, and he gets Chewy, so he's a Chewy guy, but he's some anger management issues over there.
I blame Harry's parents because I think pit bulls are very sweet when they are in
I
nice,
agree.
nurturing
I agree.
environment.
I agree. Well, what can you do? All right. Belly Lipschultz, thanks so much for doing that here. FedEx, FDX, stock's down 11%. It was up like 50-some-odd% yesterday on year to date. So a big surprise here. Company reported earnings disappointed with their financial results here. Lee Klaskow, he covers all the transports and logistics stuff for Bloomberg Intelligence. Second day in a row in studio. How about that, man? What's going on at FedEx?
Lucky me, lucky you.
Yes.
Paul. How you doing?
Good.
Yeah, so FedEx, it's really the express business, if you think about their air freight business.
So they have air freight, ground, and express? Is that how it breaks
No, express is the air freight.
Okay.
Ground is the stuff that comes to your house. And then freight is the less than truckload business.
Okay. And the express business that most of us think about.
Yes, the planes, because that's what they were built on. They were first an express company that built out a ground network, where UPS was a ground network that built out an air network.
See, makes it all.
Because Fred Smith kind of invented that network.
Yeah. So what's going wrong with that network?
It's just gotten too big. So they're trying to do a lot of cost savings, but the cost savings aren't coming up to the, I guess they're not servicing in the EBIT line because they're facing some headwinds, whether it's demand headwinds from just consumers not buying as much. The U.S. Postal Service was a big customer. They're actually using less air, more ground, and so that's not great for FedEx. So there's a lot of headwinds that they're facing, and it's really impacting their overall margins. And their margins were, below 2%,
wow,
which is not great. And it was about 220 basis points less than what analysts were expecting for the quarter.
What did we learn about the health of the U.S. economy and the U.S. consumer from these FedEx earnings?
It's a great question. I didn't learn much because I was more or less focused on their businesses. But what I would say is that we are recalibrating demand. We're still coming off those creamy highs from the pandemic, so we're still normalizing, and that's going to continue to take time. But the consumer seems to be in a pretty good spot. They mentioned that their peak season was running relatively well. But it's also worth noting that they were expecting probably more volumes in their express business, and that kind of misaligned costs and kind of added to the margin pressure that they faced in their fiscal second quarter.
So during the pandemic, everybody started shopping more, and a lot more packages were going through the FedEx system. Did they add a bunch of fixed costs to service that demand, and now we're at a point of, now we've got to take some of those fixed costs out of the system?
No, it really wasn't that. For them, it was really about getting people and technology in the right places. Because, I mean, they had the sorting facilities, they had the planes, they had the trucks. What they needed to do is just be a lot more productive in terms of the throughput of their overall system. And it's a very tough business because, they try to predict as best as they can a couple of weeks out, but, things happen. Demand happens and supply chains shocks happen like we're seeing in the Red Sea right now.
I hear the term shipping recession a lot, and we're in a shipping recession. I'm a little confused. I mean, everyone in my apartment complex is getting about 10 packages a day. My doorman is completely overwhelmed with all of the packages. But can you talk a little bit about, like, what does that mean, and how are we seeing that in
So
FedEx?
we've been in a freight recession for quite some time. If you think about it, 2022 was the peak. If you look at any earnings of any companies that I cover, whether it's a railroad, a trucking company, a parcel provider, a marine shipping provider, you're going to see peak year earnings for most of them in 2022 and fantastic earnings in 2021. And that was just purely driven by the pandemic. And again, we're normalizing, right? So, Paul, I'm sure you're going on vacation soon. So instead of maybe buying a new furniture, you're going away.
Yep.
And so people are doing more of the services aspect. And then all of a sudden interest rates are higher. So people are buying less houses. And so you're filling the house with less stuff, because when you buy a house, you usually buy a lot of stuff that goes along with it. So just people are just maybe still on the services side more and less on the product side more. The good news is that the destocking that we saw over the last 12 months seems to be coming to an end. And so that would mean to us that normal seasonality are going to go back into force in 2024. And we should see more normal seasonal patterns next year. And, for most of the companies that we cover and in the markets that we cover, we are expecting growth north of where GDP expectations are for.
So for FedEx, the stock was up 50% as of yesterday's close, now down 10% today. What was the market, if we are in a recession, is the market looking forward to saying, hey, 24 and 25 are going to be better years relative to 23, I guess?
Yeah, so the reality is FedEx was a poor performer before 2023. They did a lot of let's call it, they didn't execute on a lot of their plans. They disappointed consistently. That has kind of changed. Management has, I would say they are making progress in showing the street that they can execute on their plan. I think there was some confusion over the Express network. They talked about, changing their air fleet into 3 different networks. They're color coding it. One's an Express network, one is more of a deferred network, and one is a network that they're going to rely on third parties. I think people are trying to wrap their heads around how that's going to actually benefit costs and how quickly those costs can come out.
All right, let's talk about, I think, the transport logistics topic of du jour, which is really the Red Sea, global shipping. I had to actually go to Google Maps, a week or so ago and figure out where the heck this thing is. And it's right smack in the middle of a lot of stuff. I mean, it's there in the Suez Canal, it all came back to me.
I hope that's not where you're going on vacation.
No, that is not where I'm going on vacation. But if you're Maersk, how much of a hassle is it to you, say, I'm not going to go through the Red Sea and the Suez Canal. Now I got to go around all the way down the Cape of Africa. I mean, economically, that's got to be just a real negative.
Well, it adds 10 to 12 days of voyage times, and so that adds costs. Time is money, and so you're going to see shipping rates increase. We've seen an increase in rates. So it's going to impact Europe more. It's going to impact the United States because the Suez Canal, a lot of the goods are going into Europe, because still the best way to send freight from China or Southeast Asia to the United States is the West Coast ports or some of the Western Canadian ports like Port of Prince Rupert. So that's still the best way to get stuff into the United States.
Right.
During the pandemic, there was some share shift. We're seeing that coming back to the West Coast. But anyway, so it's going to impact Europe more. And so that's going to add to costs. And what we've seen since, I think it's the end of October, costs up around like 30% to ship a 40-foot box from Asia to Europe.
Wow. But this is good for the shipping stocks. I remember back when that boat got stuck in the Suez Canal. I wrote an article about, I don't remember the name, but the carrier of the boat, the stock went up like 100, 200% in just a matter of weeks after the blockage.
Yes, it was fantastic for memes as well. And, you know, yes, it's good. So the container liner industry is facing a difficult next couple of years, probably through 2025. They're probably not going to make any money because rates are depressed right now.
And rates are depressed because demand is lower?
It's just so again, I use this this word a lot. Creamy highs. We were like we were at ridiculous highs. You know, rates are down 80% off their peaks for the liner industry, and they're down around 29-30% versus last year. So they're nearing break even, below break even. So their EBIT levels are going to probably be pretty negative for most of these companies throughout most of this next year in 2025, assuming that there's not a huge shock that we saw during the pandemic, which, you know, knock on wood, that's not going to happen.
Wow. All right. So I guess for 2024, the railroads, my favorite topic. What's kind of your outlook for kind of, you know, demand there for the railroads? Because I don't know if we're going to recession or not, but your companies really have a feel for it.
Well, as we talked about earlier, we have been in a freight recession.
Yep.
So intermodal has been negative. Intermodal's been trending down around mid-single digits on the negative side.
And that's where you put trailers and containers on flat cars.
Right, and they come in from the ports, and those are called international intermodal.
Okay.
And when they come from a truck to the rail to a truck, that's domestic intermodal.
Yep.
So that'll be on the test later.
Yep.
So what we're expecting is mid-single-digit growth. Again, probably more than GDP. You have easier comps. You have better rail service. Again, knock on wood.
Yep.
And that should drive more conversions of truck traffic onto the rails, because if you're a shipper and you're thinking about, well, do I want to do truck or rail? Like, you know, yes, rail is the emissions are less, it's better for the environment, but, you know, trucking, I know it's exactly when it's going to get to the dock within a couple hours. Rail, there's a little more variability, so there's a trade-off you have to make. And so if rails are able to improve their service, get as truck-like as they possibly can, they'll never be as good as trucking, but they can get pretty close. And if that trade-off makes sense, that a shipper's going to go that way.
You know what you should do? You should do a podcast.
That's funny you should say that, Paul.
You've got a podcast, Talking Transports. Just tell us about that. What are you trying to
I feel like retail investors, people on financial Twitter actually really like this subject.
Yeah, I launched it in October, talking to great CEOs of public and private companies. My latest episode was Tuesday. It was with the CEO of ArcBest, which is a large LTL carrier, Judy McReynolds. She's fantastic. She's one of the first female CEOs in trucking. Before that, Derek Leathers, a great character. He's the CEO of Werner. You know, he's a very insightful person, and love spending time with him. I've been able to talk to the head of the ATA, the American Trucking Association.
Right, and the great thing about Talking Transports is it gives you a good sense as to what's going on in the economy, because the transports certainly know about it. Lee Klaskow covers all that stuff for Bloomberg Intelligence. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. After a year of deal-making drought, job cuts, and collapsing lenders, bonuses for traders will be much slimmer. Bloomberg's Abigail Doolittle has the breakdown.
JP Morgan is one of these big banks that is basically, it's expected that their bonus pool will stay flat to next year. Citi, the biggest restructuring in more than a decade, their bonus pool could actually decline a little bit if it doesn't stay flat. Goldman and Bank of America, on the other hand, there is a chance that some of their traders may see their bonuses rise by a couple of percentage points.
All right, so let's check in with a few of them now. We have JP Morgan Chase, Bank of America, Goldman Sachs. They're all up about 0.5%. Citigroup up about 0.2%. And sales of General Mills fell short of estimates. Bloomberg's Simone Foxman says it's all about volume problems.
Organic net sales unexpectedly dropping about 2%. The expectation is that they would be higher by close to 3%. Particular weakness among the pet food sector. And when you look at the overall volumes, the amount that General Mills sold, it was down 4% since last year. This all resulting in a lower outlook for the fiscal year 2024 that ends in May.
Shares are down about 2.5%. To entertainment, where Paramount Global is reportedly in talks to sell its BET network to a management-led investor group. Now, sources tell Bloomberg the potential buyers include BET's CEO and a former Blackstone executive who runs New York-based CC Capital Partners. They say a price of a little under $2 billion has been discussed. Now, Paramount tried shopping the network earlier this year, but it dropped the sale after failing to get the bids that it was looking for. Paramount Global is down about 1.5%. Those are the company stories we're following this hour. I'm Lisa Mateo. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long at Bloomberg with the Dow, the S&P, NASDAQ 100 index, all pushing higher. The everything rally continues with the S&P up 5 now, 47.73. Another day of gains on the S&P, up 0.1%. Dow Industrials at a record, up another 69, up 0.2%. NASDAQ Composite Index up 43, up 0.3%. NASDAQ 100 Index, another record there, up 24, up by about 0.1%. Russell 2000 Index of small cap shares also advancing today, up by about 0.7%. 10-year yield 3.90%. The 2-year right now 4.40%. Spot gold down 0.3%. 2,033 for an ounce of the precious metal. Crude West Texas Intermediate 74.47 a barrel, up now by 0.7%. General Mills lower after earnings. It has cut its organic sales growth outlook after slower than expected volume recovery and cautious consumer behavior lowered expectations for the full year. General Mills right now down 2.3%, lower by $1.54. Again, recapping, stocks are higher. S&P up 6, gain there of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Very good, Charlie Pellet. Thank you so much. We appreciate it. Emily Garfeo, Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio. We're streaming live as well on YouTube, youtube.com, and search Bloomberg Radio. And that's kind of how you go. I'm looking at the 30-year fixed mortgage, 6.83%. That's still higher than what I'm paying, but it is below the high reached October 20th of 7.9%. So a big move down following the movement in the Fed. The question for a lot of folks when you're looking at residential real estate is that's got to help affordability out there for people, but how much? Odetta Cushy joins us. She's a deputy chief economist for First American. First American is premier provider of title, settlement, and risk solutions for real estate transactions. So, Odetta, a nice move down in mortgage rates. Is that enough to kind of get people kind of getting some deals done out there? What do you think?
It looks like it is bringing some buyers off the sidelines. A decline in mortgage rates is always welcome news, but we're still facing high prices nationally. And so when we think about affordability, it's really the combination of mortgage rates, house prices, and incomes. And house prices remain high. And so, there's only so much that mortgage rates can do, but certainly it's been welcome news. And we have seen mortgage applications tick up in November and into December as well. So it is bringing some buyers off the sidelines and boosting demand.
So bringing buyers in, what about the sellers? Is it doing anything to loosen up supply and get people to actually sell their homes and bring more supply to the market?
Right, that's the question, right? Is that rate lock-in effect? It can alleviate the rate lock-in effect a bit, but ultimately 90% of existing homeowners are locked into rates below 6%. So when we're talking about rates, getting below 7, maybe it's incentivizing some, but it's not making any big moves for sellers. So inventory is still very limited.
So supply shortage, this is going to be still a story in 2024?
That's the consistent story in 2024, an ongoing supply shortage and sort of an ongoing tale of two markets where the existing home side maybe underperforms relative to the new home side that isn't facing that rate lock-in effect.
What is millennial shadow demand?
Millennial shadow demand is the idea that there's a ton of millennials on the sidelines waiting to jump into the housing market. The millennial homeownership rate is just above 50%. So there's a lot of millennials still aging into their prime home buying years that have expressed interest in buying a home, but are either, priced out of the market right now, or there's just nothing for them to buy. And so that demand is sort of in the shadows, but ready to jump in when the, payment to paycheck calculation works for that millennial.
I'm wondering if you think, if we really do get 6 rate cuts from the Fed next year, that will be kind of the catalyst to loosen up this housing market and I guess bring it better into balance.
I think so. I think a decline in mortgage rates would certainly help to make the housing market sort of move along in 2024. I don't know that 6 rate cuts is going to be where we land, but even the Fed's own projections of 325 basis point rate cuts, and will help to give mortgage rates some downward pressure, which should help to move the housing market along next year. But I expect a slow pace of recovery, particularly with existing home sales.
How about in the mortgage market? What's the health or the status of the mortgage market here? If I do find a house and I can stomach a 6.8% rate, can I go out there and get a mortgage?
Financial conditions are still tight, relatively speaking, particularly for jumbo loans and non-QM loans. So I think it's still a little bit tougher to get a mortgage nowadays. There's been reduced capacity in response to declining origination volume. So I think a lot of lenders have been simplifying their loan offerings. So I still think it's tight out there in the credit market.
Anything to be optimistic about then in 2024 for the housing market?
I think so. Consensus is that mortgage rates will come down next year as the Fed has given the market a little bit more certainty about, what's to happen with monetary policy. And so with mortgage rates coming down, it should stimulate, some existing homeowners to list their homes and should really stimulate some more activity next year. So I think it'll be a better year. We're cautiously optimistic.
It's interesting, just in my town on the Jersey Shore, as soon as something goes up, boom, it still gets just sold in a day or two. It's just extraordinary, unless something's really mispriced. So talk to us about kind of the rental market, because one of the themes had been the poor affordability of homes pushed a lot of people, whether they wanted to or not, to either into the rental market or stay in the rental market longer than they wanted to. Now we're starting to hear some reports that the rental market's softening a little bit, maybe because there's a lot of supply coming on. What's your view of the rental market these days?
Well, that's exactly right. It's really a supply story when it comes to rents. You're seeing, housing under construction, multifamily units under construction, they're at near record highs. So a lot of constructions, a lot of multifamily units coming to market. In many markets, that's pushing up vacancy rates and putting some downward pressure on rents. So we've seen rents come down in many markets. Some are actually experiencing negative year-over-year growth, and some are just experiencing a deceleration in rents. But we are seeing that influx of supply putting downward pressure on rents on average.
And I've seen some reporting recently that some of the pandemic darlings markets, like Austin, Texas, like Boise, Idaho, which were the first places that we heard about people in 2020 decamping to, actually seeing significant declines in rental rates. I guess, is that just the supply and demand thing playing out?
Yeah, that's true. Supply and demand, certainly on the rental side. And you mentioned Austin. Austin is on our list according to our First American Data and Analytics House Price Index. It's one of the few markets that's experiencing year-over-year house price declines. And so that's a market that overheated over the pandemic and is now sort of what goes up must come down. So we're seeing negative price growth in that market.
I mean, I'm a huge fan of Austin, Texas. I love that town. But even before the pandemic, I thought their traffic was just brutal down there. Like they hadn't invested in the infrastructure, and I can't even imagine what it's like now with all the influx from the pandemic. But are there
scooters?
Yeah,
there's a lot of scooters.
There's a lot of scooters. Yeah, exactly. Lime is big in Austin. So are there other markets here? Well, I guess let me ask about California, since that's such a big part of the market here. What's the California housing market like?
So the California markets are also some of the markets that have, are still down from recent peaks when it comes to house prices. So prices are negative from recent peaks, which is not the case in many other relatively more affordable markets. So I think the story in California is that these are traditionally more expensive markets. And so when mortgage rates increased as quickly as they did, it really resulted in downward pressure on house prices in those markets, more so than in other parts of the country. And that's exactly what we're still seeing.
So what do you guys think at First American in terms of the year-end 2024 30-year fixed mortgage rate? Where do you think that can go?
We think it can go in the low to mid sixes. Barring any unforeseen circumstances, this is really hinges on the expectation that inflation deceleration will continue, and the Fed will ease next year. I think that we can go in the low to mid sixes.
I need a 5 handle to refinance my 6% mortgage here, or even a 4 handle. So Odetta, I'm a little disappointed in your outlook. I was hoping for something a little bit better, but we'll see how it goes. Odetta Cushy, thanks so much for joining us. Odetta is the Deputy Chief Economist for First American. When I bought my place in March, paid 6%, I just felt terrible, like I'm total schnoog, but then it went up to 7.9%. I was like, I'm a real estate mogul here.
I mean, we'll see. If mortgage rates follow these moves that we've seen in Treasury yields, 100 basis points down in just a few weeks, maybe.
But the
we will go
affordability, I mean,
sub-6.
for young people like from my kids who are thinking about, buying a home, the affordability issue, which Odetta was just talking about, kind of income, price, and mortgage rates, it's tough out there because it's brutal. So I don't know what's going to happen there. And
renting forever.
Yeah, and Molly Smith, Bloomberg News. I mean, I think she's been looking to buy an apartment in Manhattan, and she's been looking for a while. And that's the bad news. She's been looking for a long time because there's nothing on the market. The good news is I think she did finally get something. So that's good news. But she's in Antarctica, so we can't even talk to her. What she's doing in Antarctica, I don't know. S&P 500 pretty much unchanged on the day. The Dow's up about 0.1%. NASDAQ's up about 0.25%. Let's get world and national news right now. We'll go down to Washington, D.C. Scott Carr's got it for us.
Thanks. Good afternoon. Chinese President Xi Jinping reportedly told President Biden at a summit last month his government will reunify Taiwan with mainland China in time, but that the timing of such a reunification hasn't been decided. NBC reports the conversation took place during a recent summit in San Francisco and was confirmed by current and former U.S. officials. Michael Hirschon's the head of China research at 22V. He says he doesn't believe President Xi means any kind of military action may be on the near horizon.
I think we need to keep in mind there's a fundamental calculus at work for Beijing, which is right now it would be extremely risky, even with the U.S. tied down, so to speak, with other conflicts, to pursue reunification through military means. And I don't think that the urgency is there for China. I think Beijing continues to feel that time is on their side.
Some of former President Trump's Republican rivals are coming to his defense after the Colorado Supreme Court banned him from that state's presidential ballot next year, claiming Trump violated the 14th Amendment by encouraging rioters to attack the U.S. Capitol on January 6, 2021. Florida Governor Ron DeSantis claims the decision by the 4 democratically appointed justices violated the Constitution itself with the decision.
Could we just say that Biden can't be on the ballot because he let in 8 million illegals into the country and violated the Constitution, which he has?
Lawyers for Donald Trump say they'll appeal. A vote on President Biden's request for aid to Ukraine will have to wait until next year. Congress has been unable to strike a deal this week on funding for Kyiv and U.S. border security before the end of the year. The White House said today negotiations are going in the right direction, but that Congress needs to act swiftly come January. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index continuing to push higher. Treasuries are clinging to gains. Stocks striving to hold on to a rebound after this morning's economic data left traders measuring the chances of a soft landing for the U.S. economy. S&P up 4 right now, 47.72, a gain of 0.1%. NASDAQ 100 index, a record there, up 18, up 0.1%. The Dow higher by 62 points, up 0.2%. NASDAQ, the composite index, up 42, up by 0.3%. 10-year yield 3.90%, with the 2-year right now 4.40%. Gold down $7 the ounce to $2,033, down 0.4%. And a move higher for Brent. Now, right now, we have got Brent crude 79.52 a barrel, up 0.4%. West Texas Intermediate crude 74.13 on WTI, up now by about 0.3%. Frances Darnold is global chief economist at Manulife Asset Management. She was a guest this morning right here on Bloomberg Markets. She told us she does see a material slowdown in the middle of next year.
Recession risk is still elevated. And even let's just throw out that term recession. Stop thinking about, is it 2 quarters of negative GDP, 1 quarter of negative markets don't care as much as headlines do. We're going into a growth slowdown middle of the year. So this is a tactical Goldilocks, a nice air pocket that you can trade. You can also still believe there's a recession on the horizon. 2 things can be true at the same time.
And you can hear more of that conversation on the Tape podcast. What about FedEx as an economic indicator? Stock right now down 10.9%. FedEx is tumbling after that earnings report that exposed weakness of the company's express air business. Rival UPS, that stock down 1.1%. But again, FedEx worth repeating, lower now by 10.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, it certainly was. We appreciate that. Emily Grafeo, Paul Sweeney. We are live here in the Bloomberg Interactive Broker Studio. We're also streaming live on YouTube, so head over to youtube.com and search Bloomberg Radio. A nice trade in the insurance space today, M&A trade here. Aon agrees to buy NFP for about $13.4 billion in cash and stock. Let's break down this deal with Matthew Palazzola. He's a senior analyst, property and casualty insurance for Bloomberg Intelligence. He joins us here in our Bloomberg Interactive Broker Studio. It looks like he forgot to shave today, but that's okay. He's a player. Matt, I see the stock is down 5.5% today. So I'm not sure what's going on there. What's Aon trying to do here with this acquisition of NFP?
Sure. So it probably bears taking a step back. So these companies are insurance brokerages, right? Okay. Aon, particularly their arch rival, Marsh & McLennan.
Ooh, I know that.
They are intermediaries for large businesses that need insurance.
Okay.
Okay. So Bloomberg even will buy insurance, and they would help you do it. Okay. One of the more particularly attractive parts of the market is the middle market, so smaller companies actually.
Okay.
Marsh & McLennan has been building a business in that space for a long time now. Aon kind of let it go and ignored it. Aon now suddenly feels the need for a lot of scale, so they're buying NFP, which is a big player in that middle market space.
Are they getting a good deal? $13.4 billion for NFP Corp.
So if you look at the, it's funny, when Aon announced the deal, they talked about it on forward earnings, forward EBITDA basis. And they said, oh yeah, it's a really attractive price on a forward EBITDA basis. They're building in a nice jump in that EBITDA as well. If you look at the estimated 2023, it's about 22 times, which is more expensive than what there haven't been deals of this size, but what smaller deals are going for.
But there's earnings dilution here. I don't like earnings dilution. What's going on here?
So there's earnings dilution up front.
Is that typical for an insurance deal?
Up front, yeah. I mean, it probably takes like 2 years or something to
because they're not talking about, like I was looking for the synergies sentence. I didn't see any synergies. I saw they expects about $400 million in one-time transaction and integration costs. Your industry is different than my media industry.
So there's some synergies. Okay. Always weary of revenue synergies on the side. They're going to cut a bunch of costs out, and they did identify in the back of the investor presentation some revenue synergies. I think it might be a bit high, to be totally honest. And yeah, so it's dilutive in the first couple of years. They're taking on some debt for it as well. the margins of this business are not as good as their business either. So, I mean, there's a bunch of headwinds. We had calculated their free cash flow yield's actually higher if they don't do the deal.
Okay.
Which is why you see it selling off.
Are we going to see, another question, being a former banker, when I see a deal in my space, I start picking up the phone and I call everybody saying, hey, we got to do a deal. You saw what Aon did. We got to do a deal, trying to write some tickets here. Do you think you'll see more? Is the structure of that part of the industry ripe for any consolidation?
Okay, so what's happening in the space, and we wrote a note about this in the past, is private equity likes these insurance brokers. They're cash cows, right? Yep. So there are a bunch of them that are owned by private equity. The valuations of the deals, a lot of deals take place, valuations probably peaking a bit this year and maybe on the downturn. So we do think it's a nice time for them to perhaps get out of this business. Truist owns one. They sold 20% of that business. So you could see more. Aon's been on the hunt, though. I mean, something was going to happen. They tried to buy Willis, which was a rival a couple of years ago, and that deal fell through due to antitrust concerns. I don't think the same thing happens here. This is a much smaller deal. But since that Willis deal fell through, they've been losing more ground. It was, I think, inevitable that they were going to do something.
Do lower interest rates, a Fed pivot, is that going to help spark some more M&A in your industry specifically anymore?
I mean, for insurance brokers, that might make it, again, more attractive because they can lever them up, and the rise in interest rates probably hurt the valuation of deals. For insurance carriers, it probably makes it maybe a little bit less likely, to be honest. There's still interest rates are still higher interest rates still earning through. So still helping earnings probably into next year. Past that, then you might see them going the other way, so investment income going down, maybe less likely to reach on an underwriting deal.
Aon, based in Chicago, 50,000 employees, got a market cap of about $59 billion, so a pretty big company. I'm looking at the stock here, and year to date, it's off about 1.5%. Again, off 5.6% today. Probably on the dilution would be my guess. All right, let's step back here. I know you guys at Bloomberg Intelligence, you really always have your year ahead outlook around this time. You publish your 2024 outlook. Where do you think is the best in your coverage, property and casualty insurance? What do you think some of the best areas that investors should be looking at?
Okay, so maybe there's a couple of spaces, right? You got personal lines, commercial lines, then you got these insurance brokers and reinsurance. Probably one of the more attractive spaces, most room for improvement is going to be in personal lines and insurance. So that's companies like Allstate and Progressive. Auto insurance costs have been higher than they've ever been. It's been the kind of worst couple of years ever for some of these names.
Okay.
You're starting to see that thaw towards the end of the year. The stocks have responded to that, but all of these other spaces, they're at probably peak margins, and their valuations probably peak before their ROEs do. So, it's going to be tougher for the other spaces to improve much fundamentally in 24. So I think the personal line space probably is the place to be.
All right, to show you my ignorance, do falling interest rates, are they net positive or net negative for insurance companies?
They're net negative, so they take in premiums, they invest them, and they make money on that float. Okay. So the rise in interest rates has been good.
So it's a net interest margin kind of story that Allison Williams has taught me about for banks.
A little bit. I mean, it's not a spread business.
Okay.
It's just higher or lower. It can support underwriting a little bit, but I mean, in net, it's just a positive. Inflation going up, modest inflation is actually good because it increases insured values, maybe increases interest rates. Runaway inflation, probably bad because you are paying claims from stuff you may have wrote a couple of years ago, so things are more expensive.
And just correct me if I'm wrong, knock on wood, we haven't had a ton of natural disasters kinds of things. I mean, I'm thinking Florida, fires, things like that. So how's that impacted your business in the last
It's been good business for particularly reinsurance companies, so they're most exposed to these large
insurance
losses.
Companies that insure the insurance industry.
Exactly, Paul. So yeah, it's been good for them. There's been kind of weird weather events, but none of them have risen to the level of impacting the reinsurance companies. So it's been an abnormally good year for the reinsurance companies. The primary carriers did see kind of larger cats midway through the year, but the fourth quarter actually looks to be shaping up even better.
All right, Matt, thanks so much for joining us. Matthew Palazzola, he's the senior analyst. He covers the property and casualty insurance companies for Bloomberg Intelligence. Again, the transaction in the space today, Aon agrees to buy NFP for about $13.4 billion in cash and stock. I did check the MA page. Bankers, lawyers, they're getting paid left and right here. So a good way to end the year for the bankers and lawyers here. And let's keep those people in our thoughts, shall we? This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks. A pharmacy chain is getting reprimanded for the way it used its surveillance system. Bloomberg's Joan Doniger has those details.
The Federal Trade Commission is barring Rite Aid from using facial recognition for the next 5 years. That's part of a privacy settlement. The FTC says the pharmacy chain misused the technology to mistakenly tag people as shoplifters.
Now, the FTC says that the improper matches often involve blacks, Latinos, or women. Rite Aid right now down about 1.5%. Sirius XM Radio is being sued by the state of New York for making it difficult for customers to cancel subscriptions to its online radio services. The probe by the Attorney General's office said the company trains employees to keep customers on the phone and to not take no for an answer. Bloomberg Radio provides programs to Sirius XM satellite radio. Sirius right now down about 1.5%. Two food delivery companies are in legal trouble for the technology they use in their apps. Bloomberg's Gina Cervetti has that story.
DoorDash and Grubhub are being sued by a company that alleges patent infringement involving technology that allows customers to order items based on their geographic location. The suit was filed by Wireless Works IP in Texas. The delivery companies did not immediately respond to requests for comment.
DoorDash is down just a fraction. And some top toy makers are giving shoppers an early holiday gift. Companies like Mattel and Hasbro are slashing prices after dealing with sales declines and tight consumer budgets. Adobe Analytics says toy promotions during the holiday season are expected to peak at 35%. Mattel is down about 0.5%. Hasbro is up about 0.3%. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, looking at the markets here, a little bit of green on the screen. Not going to oversell this. The S&P 500 is up 7 points. That's about 0.1%. The Dow's up 67 points, about 0.2%. And NASDAQ is up about 0.4%. So seeing a little bit of movement there. And again, the Russell 2000, that's the outperformer of the day, up 0.9%. And again, since those October lows in the equity markets, it's been the small cap stocks, the Russell 2000, that has been the star performer there, which is good to see. Better breadth to the market. Right now, let's head down to Washington, D.C. We'll get world and national news with Scott Carr.
Good afternoon. The U.S. is set to release an ally of Venezuelan President Nicolas Maduro, Alex Saab, in exchange for a number of Americans being held in that country. Persons familiar tell Bloomberg it's expected Alex Saab will be released today for about 10 Americans, including 2 former Green Berets who were jailed on terrorism charges. In an unprecedented ruling that's headed for the Supreme Court, the state of Colorado's highest court has found that Donald Trump is ineligible to serve again as U.S. president because of his insurrectionist actions leading up to the attack on the U.S. Capitol that resulted in 5 deaths in 2021. The ruling bars Trump from the state's March 5th primary ballot. But the court stayed the decision to allow an appeal, which lawyers for Trump say they'll do. If the Supreme Court takes up the issue, Julie Norman, with the Center on U.S. Politics at University College London, says its decision will likely determine how other states then handle the matter.
Encourage, embolden other courts to rule similarly. Other states that have looked at this question, New Hampshire, Michigan, Minnesota, have not chosen to move forward with it. But I think that this ruling will open the doors for other states to say, okay, we have this precedent from Colorado. We can look at what their logic and ruling was.
In other news, drivers who had the highest accidents rates over the past year were Tesla drivers more than any other vehicle brand. That from a study of 30 automotive brands by LendingTree, which analyzed quotes from people shopping for auto insurance. Tesla drivers had 24 accidents per 1,000 drivers from mid-November of last year to the middle of last month. Ram and Subaru drivers were closely behind. Researchers also found the safest drivers drove Mercuries, while BMW drivers were the most likely to drive under the influence. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg. Back to you, Paul.
All right, Scott, thank you so much. We appreciate that. ByteDance, TikTok. ByteDance sales surged in 2023 to more than $110 billion, according to people familiar with the matter, potentially overtaking arch foe Tencent Holdings in a sign TikTok's fledgling e-commerce business is driving growth at a time of economic malaise. The world's most valuable startup's growth broadly matched the 30% pace it managed in 2022 when it reported sales in excess of $80 billion, the people said, asking not to be identified as the information isn't public. That's despite economic turbulence in China and elevated security and restrictions in key markets from the U.S. to India. Are you a TikTok person?
I'm not a TikToker.
Okay.
I'm an Instagram Reels watching a TikTok from months ago. And all my friends make fun of me. They're like, Emily, you got to get on TikTok.
But people do make real money on TikTok and Instagram, I guess.
Yeah. I actually didn't know that TikTok had an e-commerce business?
Well, I think everybody, I don't care if you're Facebook or whoever has a big audience, and historically the business models, you sell advertising against that audience.
Right.
But everybody, again, from Facebook to YouTube is trying to capture that e-commerce component to it as well. If I've got this big audience, let me sell stuff to them.
Let me sell stuff to them, yeah. But that's how TikTok influencers make money. They get these sponsorship deals, they shout out a produdt, and then...
You're not an influencer?
I'm not, no.
Charlie Pellett could be an influencer, I think.
Oh, yeah.
I love TikTok.
There you go. I mean, I don't get the business model. Eric, we need to get, or Justin, whoever's back there working today, we need to find somebody who can explain to us the economics of being an influencer, TikTok and Instagram and all that kind of cool stuff.
That'd be so fun.
Boom, I mean, they had sales of $110 billion, ByteDance did. So just some extraordinary growth here. S&P 500 up 0.2%. Sound on with Amy Mars from Washington, D.C. That starts right now.
Now, from our nation's capital. This is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
I am Amy Morris in for Joe Matthew. And coming up this hour, we will welcome in our political panel Bloomberg Politics contributor Rick Davis and Democratic strategist Jim Kessler, Senior Vice President of Third Way. We'll also learn more about that court decision that will keep Donald Trump off the primary ballot in Colorado. We're going to dig deep into that. We'll also wrap up the year in Congress and look ahead to 2024. We'll be talking later with Michael Knights, a senior fellow at the Washington Institute for Near East Policy, about the dangers posed by the Houthis and the humanitarian concerns in Gaza. But first things first, let's check the markets with Bloomberg's Charlie Pellet. Charlie.
Thank you very much, Amy Morris. Great having you on board today. The Dow, the S&P, NASDAQ, all pushing higher right now. We could see another record, at least for the NASDAQ 100 index and the Dow. Right to the numbers here. We'll give you the why in a moment. S&P up 47.75. That is a gain of 0.2%. The Dow up 63. Record there up 0.2%. NASDAQ, the composite index, up 51, up by about 0.3%. The NASDAQ 100 index up another 28. Record there up by about 0.2%. The Russell 2000 index of small cap shares again outperforming, up by 0.8%, extending the year-to-date gain now to 15.7%. Put that all in context. That's what we do here at Bloomberg. S&P up by 24.3% in the YTD column. 10-year yield 3.89% with a 2-year 4.39%. Gold down $5 the ounce to $2,034. Drop there of 0.3%. And West Texas Intermediate crude now unchanged on the day at $73.95 a barrel. An update for stocks, this year's trading and the stock market rally. Is it all about Powell or politics? That question this morning on Bloomberg Television for Lisa Shallett, Chief Investment Officer for Wealth Management at Morgan Stanley.
I think this continues to be Jay Powell's show for the vast majority of the year. I think, if we look at what markets have been cheered about, it's about this prospect of lower interest rates sooner. And I think that, Jay Powell clearly is sending a signal that he is inclined to move sooner than later. And I think that, there are clear reasons for that.
And you can hear more of that conversation on the Talks podcast. You can download it wherever you get your podcast. United States Steel proactively seeking a foreign investment review from President Biden's administration as a condition of its sale to Japan's Nippon Steel Corp, a move designed to quiet critics of the deal. Shares of U.S. Steel, they are down 0.7%. Nippon, the ADRs, up now by 1.8%. Again, recapping stocks higher. S&P up 6, up 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, thank you, Charlie, and welcome to the Wednesday edition of Sound On. I am Amy Morris, in for Joe Matthew, and we start with our top story today as Colorado's highest court ruled that Donald Trump is ineligible to serve as president because of his actions inciting the January 6th attack on the U.S. Capitol. We're going to learn more about this right now. Bloomberg Supreme Court reporter Greg Storr joins us. Greg, the trial judge in this case several weeks ago said Trump could stay on the ballot, but the Supreme Court in Colorado has now overturned that?
Exactly. The trial judge said that this provision that's at issue in the case, the insurrection clause of the U.S. Constitution, didn't apply to the president. The Colorado Supreme Court said, yes, it did. And in addition, we agree with the trial judge that Donald Trump actually did engage in an insurrection when he incited those rioters to go into the Capitol on January the 6th.
Well, that's really my main question, because has Donald Trump been convicted of insurrection? Are they setting themselves up for a question of due process?
So he has not been convicted. That is a really important point, and it may make a difference. It may not be framed in terms of due process, but this is a provision that has basically, almost never been applied, and certainly not applied in a situation like this. And so the question is, do you need a criminal conviction, or do you need an act of Congress or something else, or can a state court just do what it did here, look at the evidence itself, and make a decision?
And time is of the essence here. We do expect Trump's lawyers to appeal this?
We do. So the Colorado Supreme Court order said, we're putting this order on hold as long as Donald Trump appeals to the Supreme Court by January the 4th, which his campaign has said he's going to do. The ruling is going to stay on hold. So he may end up still on the primary ballot there. But if the Supreme Court agrees to take up the appeal, it will be in a position of basically deciding whether he can be on general election ballots all across the country.
So this could tee up other 14th Amendment questions then?
It could, or the Supreme Court could just resolve everything now. And certainly there's a lot of reasons why one might think the Supreme Court would want to do this. Better to get a decision now, one way or another, or decision soon, rather than have this issue, sort of drift on towards the fall when it gets harder and harder to make a change in terms of who the Republican nominee is.
Conventional wisdom has it that the Supreme Court moves quite slowly when it comes to certain cases, but they can actually move as fast as they like, correct? So they could expedite this if they need to.
Absolutely. Bush v. Gore in 2000, think about that case. That appeal was actually filed on Saturday, and the case was resolved on Tuesday, 3 days away. So if the Supreme Court feels the need, it can. Of course, the court's also got this other matter before them involving Donald Trump's claim of immunity from criminal prosecution. The special counsel there has asked the Supreme Court to decide that on an expedited basis, and the time frame he is asking for there is 2 months, which is about what the court took in the Nixon tapes case back in the 70s.
Assuming the Supreme Court does take it, well, first of all, let me ask you if you think they will. Does it look like, is it a foregone conclusion the Supreme Court will take this up?
I wouldn't say foregone conclusion, but most of the people I've been talking to, both before and after the decision came out, have been saying, if a state Supreme Court says Donald Trump cannot be on our ballot, then the Supreme Court would have to get involved. It was one thing as long as lower courts were saying, no, nothing to see here, we're going to let the election go ahead like planned. But now that the Colorado Supreme Court has intervened, it seems really hard for the Supreme Court to say, we're just going to let that decision go and wait a while until we see more from other courts. So odds are pretty good that the Supreme Court will agree to take this up.
A bit of a touchy question here, but I think you can handle it. Is there expected pressure on Clarence Thomas, Justice Thomas, to recuse himself, considering some of the allegations regarding he and his wife?
Well, there will certainly be pressure. There will be calls for him to recuse. That is a decision that has always been, and looks like it will continue to be, up to the individual justice. Justice Thomas, for the most part, has not recused from any cases connected to January 6th. The one exception to that had to do with John Eastman, the lawyer for President Trump, former lawyer. He's a former Clarence Thomas law clerk, and that case also sort of involved talk about efforts to persuade Justice Thomas himself. So there were some special circumstances there. There's nothing that I have seen that would indicate that Justice Thomas is going to change his approach and recuse from this case, but I'm sure there will be calls.
Do you anticipate a national response to this? What sort of impact do you see from the ruling on the High Court?
Well, it will have a huge national impact. I mean, it is possible the Supreme Court will take up this case and effectively declare Donald Trump cannot be a candidate for president. And that is every bit as big of a decision as it sounds like. An awful lot of people don't think the Supreme Court will be willing to do that. This is a court that doesn't always want to put itself in the middle of political battles. And this, in addition to a legal battle, is very much a political battle. But if the court were to do that, it would just have a seismic impact. And, you would certainly be ranking that up there with among the very biggest decisions the Supreme Court has ever issued.
It's incredible. And we're going to keep watching it with you. Bloomberg Supreme Court reporter Greg Stohr, always a pleasure. Thanks so much for taking the time with us. Now, let's turn to the war between Israel and Hamas and the humanitarian crisis in Gaza and the attacks in the Red Sea. Michael Knights is a senior fellow at the Washington Institute for Near East Policy, and he joins us now. Michael, thank you for taking the time with us. We're just going to go with the top news of the day. A top political leader of Hamas was in Cairo in Egypt today, holding talks with Egyptian officials about a possible truce in the war in Gaza and how to make that happen. What does that signal for you?
Well, it signals that Hamas is desperate for the action to stop. They want a series of long-lasting truces or ceasefires and to get back to the business of horse trading for hostages. That's their survival technique to try and stop the Israeli military action and get into a space they're much more comfortable with, which is hostage exchanges.
Okay. Would a truce then, I'm trying to figure out how to frame this, would a truce then help throughout the region as far as attacks from the Houthis? And would it create more of a buffer to prevent other proxy type attacks?
The Houthis and the other Iran-backed members of the Axis of Resistance will keep attacking as long as there is a ground war in Gaza. So it certainly would reduce the amount of military tension in the region. But the Biden administration still seems committed to allowing Israel to finish the job on Hamas before we move to a full ceasefire.
Now, Israeli President Isaac Herzog says his country is prepared to agree to a second humanitarian pause in fighting in exchange for these hostages. There are still more than 120 hostages being held there. What does that tell you as far as over the next few weeks or even few months as far as how the fighting may rotate through, how they're going to be able to have these future pauses?
Well, CIA Director Bill Burns and a number of other regional officials are working 24/7 to try and get both the foreign hostages and the Israeli hostages back from Hamas. The Israelis became very tired of Hamas's negotiating tactics in which they would dangle the hostages and then pull them back at the last moment in search of a better deal. That's why we got the collapse of the ceasefire and the new phase of ground operations. There's an attempt now to get a new set of hostage releases going. But if Hamas uses its delay tactics again, that effort will probably collapse as well.
Well, that was what my concern is that the hostages are a bargaining chip, and they're not going to be willing to give up that bargaining chip. How far can this go?
Well, the Israelis believe that they're about 3 to 6 weeks away from completing the operation, which would include overrunning the locations where the hostages would, in theory, be located. Those will be, there's a smaller number of places where they could be. And as those 3 to 6 weeks go by, Hamas's leverage is reduced because those hostages are going to get reached by the Israelis anyway. So the Israelis are counting on being able to reduce Hamas's leverage and eventually force them into a position where they give back the hostages in response for perhaps a deal where the Hamas leadership can relocate to another country like Qatar.
So then who is operating under a greater sense of urgency? Would it be Israel or Hamas?
Hamas gambled when it took the hostages that Israel would be feeling all the pressure. But in fact, Israel has been very steady in continuing its military operations, and the US has provided very strong support to Israel to continue those operations. So that's probably surprised Hamas and the broader axis of resistance.
We are talking with Washington Institute senior fellow Michael Knights. Michael, you have a new study out on the tricky challenge posed by the Houthis for the United States. How much of a threat do they pose, and to whom?
The Houthis pose a very significant threat to global trade moving through the Suez Canal. You know, what they've currently done with their attacks on shipping in the Red Sea, which is south of Israel and, you know, is the way that you reach the Suez Canal to connect the Indian Ocean to the Mediterranean. They've essentially put global shipping back to the 1850s in some ways, where you had to go around South Africa to get from Asia to Europe. So they've had a very significant effect in terms of affecting global shipping. You know, we remember when the Ever Given tanker turned sideways in the Suez Canal and it caused enormous economic damage to both Asia and to Europe. So that's the threat that they pose. At the moment, the US is pulling together a escort mission with a variety of nations so that ships can feel and insurers can feel safer to use the Red Sea and the Suez Canal again.
In your column the study that you wrote, you referred to them as the axis of resistance. I wonder if that was an intentional use of the terminology that we may remember from World War II.
Yeah, and then there was also the axis of evil, if we remember, from 2002 as well. But it's what they call themselves, actually. It's an attempt to bring together all the different Iran-backed elements like Lebanese Hezbollah, Hamas, the Iraqi militias, and the Houthis in one movement that is there to resist both Israel and the United States. So it's their own terminology. And the Houthis, rather, are trying to demonstrate that they're the most radical and risk-acceptant member of the axis of resistance in this crisis.
Now, we only have a couple of minutes here, and I don't want to get too deep into it, but I think it's important that we establish what the relationship is between the Houthis and Iran. Can you briefly explain that for our audience?
Yes. The Houthis built their movement as a clone of Lebanese Hezbollah, which was itself a clone of the post-revolution Iran's government. So if you imagine the Houthis would be the younger brother to Lebanese Hezbollah, and they both look up to their parent, the Islamic Republic of Iran. And there are very strong command and control links between the Iranians and the Houthis, including the provision of all of these advanced weapons which have been fired at Israel or at international shipping. So there's very tight connections indeed.
And in our last minute here, Michael, how does the U.S. then secure its own interests while keeping in mind the future of the Yemeni people? What sort of position does this put our U.S. military?
The U.S. military is in a strange position because it's facing an opponent, the Houthis, who don't fear America. And it's also coming at a time when the Yemen peace process, which might end the 9-year-long war, the world's greatest humanitarian crisis, is almost ready to be signed. So the US doesn't want to do anything to disrupt that. And as a result, the Houthis are kind of bulletproof right now. They can do this to global shipping and nobody's going to do anything back to them.
What should we be watching for over the next few weeks? We have about 30 seconds here.
We should be watching to see how many more nations join the US in the escort mission in the Red Sea.
All right, we're going to continue to watch that with you. Thank you so much for filling us in and for bringing us up to speed on how this is developing. Michael Knights is a senior fellow at the Washington Institute. He specializes in the military and security affairs of Iran, Iraq, and the Gulf states. We have much more still to come. Stay with us. You are listening to Sound On. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, all advancing right now. Treasuries holding on to gains. Stocks striving to hold on to a rebound after a fresh batch of data this morning left traders measuring the chances of a soft landing for the world's largest economy. NASDAQ 100 index up now by just about 0.2%. NASDAQ Composite Index up 0.4%, up 58 points. S&P up 7, up 0.1, while the Dow on track for another record, up 48, gain there of 0.1%. NASDAQ 100 index, by the way, also on track for another new high. 10-year yield 3.89%, with the 2-year right now at 4.39%. Gold down $5 the ounce to $2,035, drop there of 0.3%. And West Texas Intermediate crude up 0.1%, 74.03 a barrel. Bitcoin with a 44,000 handle, up right now by 3.6%. Sources tell Bloomberg Paramount Global is in talks to sell its Black Entertainment Television Network to a management-led investor group. The potential buyers include BET CEO Scott Mills and Chen Chu, a former Blackstone executive who runs New York-based CC Capital. Those sources say a price of little under $2 billion is being discussed. Paramount Global down now by 1%. Again, recapping, U.S. stocks continue to advance. The Dow, the S&P, NASDAQ, all in the green. S&P up now by 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound on Bloomberg Radio.
You are listening to Sound On, and I'm Amy Morris in for Joe Matthew. Let's turn now to our political panel. Bloomberg Politics contributor Rick Davis and Democratic strategist Jim Kessler, Senior Vice President of Third Way, joining me today. Thanks so much for being here. We want to begin with the Supreme Court of Colorado, the ruling that Donald Trump cannot be on the primary ballot in that state because of his actions surrounding the January 6th attack on the Capitol back in 2021. First, I'm interested in each of your reactions to that Supreme Court decision that they overturned the trial court's decision. Was that a surprise to either of you?
Well, I'll take a stab at that, Amy, and welcome to the show. We love having you, and what an interesting day. I would say that it wasn't a surprise that the Supreme Court took it up. I mean, it's a pretty weighty issue, and anytime you're debating a constitutional issue like this, especially something as hypersensitive as a presidential election, you're gonna get the priority. So nobody, I don't think, in the political world was surprised that they would take it up. I think, they were. I think it was a flip of a coin as to whether or not they would rule the way they did, because 4 other states have said basically, no, we're not gonna take this moment to make a decision based on the 14th Amendment that Donald Trump shouldn't be on a ballot. So this is a surprise outcome, a close one, 4-3. And yet, I think we're gonna probably see that Donald Trump will make better use of the propaganda around this. The system's against me. These are all Democrats who got put on the bench, and he'll make incredibly good use of this. Now, the media will try to talk about it as if it's a problem for him, but I think we're going to find out that this is another way that Donald Trump turns title on us, and will make it actually a centerpiece of his campaign.
Jim, your thoughts?
Well, I think Donald Trump will sink or swim based on what voters do, not on what courts do. I wasn't overly surprised at the Colorado decision, because a lot of secretaries of state in many different states are doing legal actions to try and prevent Donald Trump from being on the ballot based on January 6th. And, eventually one of these cases was going to go through. I expect that the Supreme Court will overturn that ruling and Donald Trump will be on the ballot in Colorado. I don't think this is a clear victory for Donald Trump, although I agree with Rick Davis that he'll make hay out of it. What I think is very possible is the Supreme Court will have this ruling in front of it and say, look, for due process reasons, Donald Trump has not been found guilty of insurrection. He should stay on the ballot. But there's another case that's heading to the Supreme Court, that is Jack Smith's case at the federal level, and whether Trump is immune from prosecution, as president. And it could very easily be a split decision where the Supreme Court says Trump can be on the ballot in Colorado, but we're also going to rule that he's not immune from prosecution. So that case is actually more serious for Donald Trump for his political future.
Both of you gentlemen agree that Donald Trump is likely to make hay of this, but will say Nikki Haley make hay of it or Joe Biden make hay of it. Does this move the needle for any of his opponents, whether Democrat or Republican?
Yeah, I'm much more confident, Amy, that Joe Biden's going to make better use of this than the Republicans running directly against Donald Trump, who are on a ballot with him in 2 weeks. This has been the most docile primary I've ever seen, where Donald Trump has a big lead and everyone's trying to catch up with him, and somehow we're going to try and catch up with him by not even talking about him. That is really difficult. And so I've been woefully unimpressed with the competitiveness of this field from the perspective of willing to take on Donald Trump to try and beat him in a nomination. If they're trying to get him the nomination, I think they're doing a great job, but certainly not from that perspective. And it's only been recently that Joe Biden has gotten into the act of sort of checking Donald Trump. And that's equally baffling to me, knowing that it's highly likely for the last 6 months that Donald Trump was going to be the nominee of the party. And for all intents and purposes, the Biden campaign has been willing to let him consolidate his hold on the Republican Party without having any noise coming from the White House.
Jim, a question for you. A New York Times Siena College poll finds nearly a quarter of Trump supporters believe that he shouldn't be the GOP nominee if he is found guilty of a crime. Does that move the needle at all?
Possibly. I mean, look, I think what these polls show is that Donald Trump has a commanding lead, but not a stranglehold on the nomination. I do believe that Nikki Haley has a shot. A second place finish in Iowa might mean a first place finish in New Hampshire. And then at that point, I think every media outlet from the Weather Channel to ESPN, the Ocho, will be wondering if Donald Trump is vulnerable. But, this goes back to, I think, an original sin from the Republican Party, which was you had the January 6th insurrection, and then many Republicans thought, okay, that's the end of Trump. So we'll let him die there. And then they all rallied back in support of him. So the situation where, the court can rule in a certain way, and allow Trump on the ballot, the reason why that helps Trump is because Republicans after January 6th decided to hold back rather than to say, this was truly a serious crime. He should no longer be part of our party. And they're paying the price right now.
And Rick, to you, what stood out to me in that poll is that nearly a quarter of Trump supporters believe he shouldn't be the nominee. To me, it sounds like just a quarter. Like, why would his supporters or why would the GOP think this is okay to nominate someone who may be convicted of a crime?
Yeah, I think you got to take it in context. This is a national survey. Very few states are actually well represented in the survey where the campaign is actually happening. I mean, when you look into where Donald Trump is on the ballot in most of these states, this poll's taken, he's at like 65%, right? I mean, there really isn't a primary going on in the rest of the country. When you then look at places like Iowa, New Hampshire, where the campaigns have been going at it for the last year, you have a lot more, almost a third, if not half, in New Hampshire of Donald Trump's ballot support. People who are saying they plan to vote for him, who are saying, but they look at other options right now, right? So you do see echoes of a willingness to move off of Trump, especially based on well, if he gets convicted or, if some of these other things happen, or just in general, are you willing to look at other people? And that's where the field has their hopes, right? That they can peel off some of these folks off of the Trump ballot in the late hours of the primary in both Iowa and New Hampshire to do exactly what Jim Kessler talked about. In this case, Nikki Haley actually, overperforming in Iowa and beating Donald Trump in New Hampshire. And all of a sudden, we're having a completely different conversation about Fortress Trump, down in Mar-a-Lago, thinking he's unbeatable.
All right, one more quick question for Jim. If the Supreme Court does decide to take this up, and it looks like they may, is there going to be a more national impact from this ruling? What sort of impact do you anticipate?
I anticipate that the Supreme Court will say that Donald Trump should be on the ballot in Colorado. I think they will cite due process, that he has not been convicted of a crime. And the net result will be further, I'd say, distrust of the Supreme Court in some ways, and feeling like, well, this is a Trump-appointed court. But, I think the Jack Smith case is the one that has more weight here than the Colorado case. So we'll see what happens there with the Supreme Court.
And we're going to continue to watch it. We'll also continue this conversation. We're going to shift gears and talk about Congress in just a few minutes. But first, let's check world and national news with Scott Carr in the Bloomberg 99.1 newsroom in Washington.
Thank you, Amy. Another ceasefire to allow humanitarian aid into Gaza may be in the works. The political leader of Hamas is in Cairo today talking with Egyptian leaders about the Israeli hostages and a possible ceasefire. On Tuesday, Israeli President Isaac Herzog said the country is willing to engage in talks for another humanitarian pause. Former President Donald Trump says in a statement he will file an appeal with the Supreme Court after the Colorado Supreme Court voted yesterday to ban him from the state's presidential ballot next year. In a 4-3 party line vote, the court said yesterday Trump violated the 14th Amendment's insurrectionist ban when he encouraged the deadly riot at the U.S. Capitol in January of 2021. Defense Secretary Lloyd Austin's completed a multi-day swing through the Middle East with a visit today to the USS Gerald R. Ford, the aircraft carrier at the center of a naval strike force President Biden deployed to the Mediterranean in support of Israel. In a holiday message to the crew, the secretary told them they're performing an important mission and lauded them, although lightheartedly, for a number of achievements.
You sailed more than 55,000 nautical miles. And I'm honestly not sure what I find more impressive, the fact that you've racked up more than 15,000 flight hours, or that you've consumed more than 155,000 Red Bulls.
The administration says the naval force is there to deter regional actors like Iran from escalating tensions. And preparations for Times Square New Year's Eve celebrations underway. The 7-foot-high, 1,000-pound numerals to 2024 arrive today. Anyone can get pictures of them in Times Square through Friday. Global news 24 hours a day and when you want it with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, and NASDAQ holding on to earlier gains. The S&P right now up 647.74. That is a gain of 0.1%. The Dow up 40 points right now, up 0.1%, on track for a record close there. NASDAQ 100 index also in record territory, up 34 right now, a gain of 0.2%. The NASDAQ Composite Index up 57. That is a gain now of 0.4%. The Russell 2000 index of small cap shares up 0.8%. 10-year yield 3.88%. The 2-year 4.38%. Spot gold down $4.50 the ounce to $2,035. Drop there of 0.2%. And West Texas Intermediate crude oil now lower by 0.3%, $73.75 a barrel. Consumer confidence may be on the mend as inflation ebbs post-pandemic. And with more on the story, here's Bloomberg's Vinny Del Giudice.
The Conference Board Consumer Confidence Index advanced this month to the highest in almost 3 years. There's optimism across the board, from jobs and inflation to income and business conditions. More Americans plan to go on vacation, buy a home, or appliances, trends that bode well for 2024. Another economic report today showed a rebound in existing home sales in November. Vinny Del Giudice, Bloomberg Radio.
And speaking of confidence and gasoline prices, pump prices had their biggest jump in more than 4 months, tracking gains in oil as many Americans get ready for holiday road trips. According to data from AAA, regular gasoline now costs an average of $3.09 a gallon after notching the biggest one-day increase since August. Oil stocks trading mixed. ExxonMobil down 0.2%. ADRs of BP up 0.2%. Chevron up by 0.7%. Recapping stocks higher. S&P up 5, up 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Sound On Bloomberg Radio.
You're listening to Sound On. I'm Amy Morris, in for Joe Matthew, and we return to our political panel. Bloomberg Politics contributor Rick Davis and Democratic strategist Jim Kessler, Senior Vice President of Third Way. Rick, let's start with you. Looking at Congress, the Senate leaves today. So what's left for them to do when they get back?
Well, a lot of people have
called
called
this
this
kind of a trick question.
A lot of people have called this the Great Do-Nothing Congress of 2023, and their departure has not disappointed those folks. I mean, we thought they were getting close on a deal to get this supplemental done, especially on border security, and I guess they just exhausted their patience with one another, and McConnell and Schumer both agreed maybe we get more done by not being in Washington than being here. So when they get back, I mean, it's just going to be nuts. One, they take this right back up. Will they make progress over the holidays? We hope so. A lot of this is staff-driven at this stage, going through details, actually writing a bill, which is not easy as a bill this complicated. But that could happen literally the first week they get back on the 8th of January. House gets back on the 9th, and they start worrying about things like government funding, which expire. The first expiration for these agencies expire, I think, on the 19th, and then the second comes up on February 2nd. And in between that, you have the Iowa caucuses on the 15th, and the New Hampshire primary on the 23rd. So this is going to be one of the craziest Januaries on record.
Yeah, Jim, I wanted to ask you about that very thing. Lawmakers returning on the 8th and the 9th of January. The funding deadline is the 19th. There's another funding deadline on February 2nd. As Rick was just saying, the Groundhog Day jokes just write themselves. 10 days to get something done. Are we already facing a threat, even now, of another government shutdown?
Absolutely. I mean, it wouldn't be Washington if we weren't facing an imminent threat. I'm a bit optimistic, okay? I am optimistic on a border deal. The right people are in the room. Senator Langford, Republican, Senator Kirsten Sinema, an independent, Chris Murphy, Democrat. They're the right people. Schumer and McConnell have both blessed this and it issued a joint statement. I think if we have a border deal, which means we'll have a supplemental appropriation that includes Ukraine funding and Israel funding. That opens the way for more cooperation on the other government funding packages. And yes, the wisdom of the new speaker, Mike Johnson, we now have 2 separate deadlines on government funding. That's going to be a nightmare. But I'm optimistic that this is going to get done, including a border package, which would be very, very significant.
To that point, Jim, a story by Bloomberg's Stephen Dennis on the Bloomberg terminal says just 22 new laws have been enacted as of this week, as of Tuesday. 22. Now, last year they did 281. So, as you were saying earlier, do nothing Congress. Who will voters blame for this? Or is this one of those things that would even come up, or even register with a voter once it's time to cast the ballots, Rick?
Yeah, I think that... I'm sorry.
Go ahead, Rick.
Okay, thanks, Jim. Yeah, I think that this starts to register with voters. Look, I mean, Congress has a 17% approval rating. I mean, everybody talks about how unpopular the president is, but Congress is half as popular as the president of the United States. And there's a reason, because voters don't see Congress accomplishing much that make their lives better or secure our nation. So, yeah, this does have an impact on voters, and I think could have an impact on the ability for Republicans to win a majority again and in the House of Representatives. What are they going to tell their constituents when they go home and say, hey, you need another 2 years of me because I've done absolutely nothing for you?
Jim, you agree with that?
Well, this is one of the reasons why I think a border deal is possible. And this, I'm going to go into the Wayback Machine to 1996. Okay. And there was a deal cut between Bill Clinton, who was president at the time, and Republican House Speaker Newt Gingrich on welfare reform. And essentially, Gingrich felt if we didn't deliver something that resembled a Republican promise, my new majority would be gone. Welfare reform was also a Clinton promise. And so they teamed up on it, and it worked to the benefit of both of them. It worked to the disadvantage of Bob Dole, who was the Republican nominee for president at the time. And so what you're seeing right now is a border deal would help Biden. It would help McConnell. It would probably help Mike Johnson. He has something to sell for his Republican members to sell, and it hurts Donald Trump. So Donald Trump will oppose whatever deal comes up. But I do think that the stars are starting to align for something major like this.
Okay, gentlemen, we're going to have a little bit of fun. We only have about 2 minutes left, but this is an end of the year type of broadcast, and we want to find out what stands out to you most from Congress this year. So when you look back at 2023, and Rick, we'll start with you, you say, oh yeah, that's the year, fill in the blank.
That's the year we removed a speaker, had an incredible amount of hard times finding a replacement for that speaker, and wound up with someone who was a backbencher.
And Jim?
Boy, it's really hard to top that one. Yeah, I'm just going to have to say ditto. Like, I've never seen anything like that in my life.
It's the fight over the Speaker of the House, and not so much the fight between Democrats and Republicans, but the fight within the Republican Party?
Yes.
Yeah, that's exactly right, Amy. Go ahead, Jim.
And the stabbing in the back that you are seeing among Republican leadership, Scalise stabbing McCarthy, Jordan stabbing Scalise, McHenry somehow emerging as this hero, and then him being stabbed in the back, and then someone that we all had to Google becoming Speaker of the House. There you go.
There we go. Let's leave it there. Thank you so much, gentlemen, for talking with me about this. Rick and Jim, for joining us and taking a look back at 2023 and how Congress handled things and what we can expect for 2024. Bloomberg Politics contributor Rick Davis and Democratic strategist Jim Kessler, Senior Vice President of Third Way. Much more still to come on this Wednesday edition of Sound On. Stay with us. You're listening to Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Among the names reporting today after the close of trading, Micron Technology. Micron has rallied more than 60% this year on bets that the maker of memory chips is through the worst of an industry downturn. Wedbush analyst Matt Bryson does expect gross margins to top estimates as the company benefits from higher pricing. Shares of Micron, they are down ahead of that report, dropping now by just about 2%. NVIDIA, another big chip maker, up 0.2%. Intel down 0.3%. Advanced Micro Devices down now by 1%. General Mills has cut its organic sales growth outlook after slower than expected volume recovery and cautious consumer behavior lowered expectations for the full year. And with more, here's Bloomberg's Kimberly Adams.
Charlie CEO Jeff Harmening says we're seeing consumers continue to display stronger than anticipated value-seeking behaviors across our key markets. He says the company has faced stiffer competition on store shelves, putting short-term pressure on market share. General Mills brands include Cheerios, Cocoa Puffs, Betty Crocker, and Blue Buffalo Pet Foods. Fiscal second quarter volume fell 4 percentage points, with the pet segment showing the largest decline, followed by North American retail. Charlie?
And that's Kimberly Adams reporting. Right now we do have General Mills shares lower after earnings, down by 2.5%. FedEx now down 10.9%. FedEx tumbling after an earnings report that exposed weakness of the company's Express Air business. Rival UPS down 0.9. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Sound On Bloomberg Radio.
You are listening to Sound On. I'm Amy Morris, in for Joe Matthew. We have much more coming up on the program, but first we want to check world and national news with Scott Carr in our Bloomberg 99.1 newsroom in Washington. Scott.
Thanks, Amy. Good afternoon. Chinese President Xi Jinping has warned President Biden that Beijing will reunify Taiwan with mainland China. That's according to 3 current and former U.S. officials who discussed a recent summit attended by the leaders in San Francisco. Xi told Biden in a group meeting that China would prefer to take Taiwan peacefully, not by force. China's leader also referenced some public predictions by members of the U.S. military who had said Xi plans to take Taiwan within the next couple of years. She said they're incorrect because that he has not set a time frame. Reactions are coming to Colorado's Supreme Court decision to refuse a place on that state's presidential primary ballot next year for Donald Trump, whom a party line majority said did violate the U.S. Constitution's 14th Amendment by acting as an insurrectionist and encouraging the deadly 2021 attack on the U.S. Capitol. In Wisconsin today, President Biden said as to whether Trump actually violated the amendment, he'll let the courts make that decision, but that there's no doubt in his mind Trump encouraged the attack on the Capitol that took the lives of 5 people.
You saw it all. Now, whether the 14th Amendment applies, I'll let the court make that decision. But he certainly supported an insurrection. There's no question about it. None. Zero. And he seems to be doubling down on about everything.
While Florida Governor Ron DeSantis blasted the partisan decision, pointing out the legal process in Colorado did not provide a trial on the matter.
Look, if somebody's convicted or something of some of these things, there was no trial on any of this. They basically just said, what, you can't be on the ballot? I mean, how does that work?
Trump's campaign has said it does plan to appeal the decision to the U.S. Supreme Court. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg. Amy.
All right, thank you, Scott. And we want to now bring in Bloomberg's Kaylee Lines. She's going to be taking over from here. Kaylee, you have a power-packed hour. You're going to also, as we did, dig into that Colorado Supreme Court ruling.
Yeah, we have to, right? That's dominating the headlines in politics today. If Donald Trump is, at least for the time being, going to be kicked off a ballot in a U.S. state in a presidential election cycle, it's going to be a pretty big deal. But so much of it, Amy, as we know, comes down to the 14th Amendment, this insurrection question, when that is not actually a crime he has been charged with and he hasn't been convicted of any crime. So we're going to break that down and get reaction as well from a Republican member of Congress. Congressman Brian Stiles is going to be with us on the show. Obviously, we have a lot more to consider in the Washington world beyond just the 2024 presidential cycle, because in case you hadn't heard, Congress is out of town and they have a lot to do when they come back.
Right. Their plate is full because their plate was full for most of 2023, and they didn't get a lot done. Only 22 laws were passed the entire year. Compare that to a couple of hundred the year before. So they're going to have a lot to deal with, including a potential shutdown. I cannot believe we are facing this again.
Yeah, January 19th. Everybody circle that date on your calendar because, frankly, in the political universe, that is not very far away, especially considering the House and Senate are not coming back until January 8th at the earliest. So that's not a very long window, Amy, to try to get things done, at least when it comes to appropriation bills, let alone thinking about the supplemental with really crucial funding for Israel, Ukraine, and border security as well, which, as we know, is where the hiccup really has lied.
And you just mentioned Israel. Let's talk a little bit about that because you have someone on to talk about the disruptions in the Red Sea. There are a lot of different angles to this and a lot of layers to this issue.
Yeah, there absolutely are. Of course, there is the human consideration, the idea that this is active conflict and what is a vital waterway in terms of seaborne trade. But it really is the trade issue we're going to dig into with Lee Klasko of Bloomberg Intelligence. He's one of our great transportation and freight analysts, just looking at how ships now have to go around the coast of Africa, what that's going to mean for the time of these shipments, for the cost of these shipments. All of these potential inflationary impacts really is something we're going to dig into.
You're also going to look at childcare costs with Kelsey Butler. That's one of my favorite stories on the Bloomberg Terminal this week, and I cannot wait to hear that interview. Kaylee, thank you so much for bringing us up to speed. We're going to tune in and listen and watch. And the second hour of Sound On starts right now.
From our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover them.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
It's hour 2 of the fastest show in politics. I am indeed Kaylee Lines, but Joe Matthew has gotten out of town today, along with pretty much everyone else in Washington. That doesn't mean, though, that we don't have much to discuss on today's program. There is a lot ahead, including the Colorado State Supreme Court ruling that will take Donald Trump off the ballot unless the Supreme Court of the United States decides otherwise. We're going to break that down with our very own Gregory Cordy, plus get reaction from Republican Congressman from Wisconsin, Brian Stile. We'll also look abroad at what's going on in the Red Sea in terms of trade as Houthi rebels continue to attack vessels in that crucial waterway. We're going to talk to Lee Klasko of Bloomberg Intelligence. He's one of our freight and transportation analysts. Plus, here at home, we're going to take a closer look at the issue of childcare with Bloomberg Equality reporter Kelsey Butler. First, though, let's get a check on the markets. Charlie Pellet, as always, has that for us. Hey, Charlie.
Thank you very much indeed. I got the fastest flash in politics with the Dow, the S&P, NASDAQ, all advancing. Little change. Looked like the S&P is just about to fade here, up by less than 1 point. We've got the Dow up 20, gain there of just about 0.1%, on track for a record. NASDAQ up 40 now, higher by about 0.3%. NASDAQ 100 index up 14. Could see a record there today. Another record close on the NASDAQ 100 index, up right now by about 0.1%. 10-year yield 3.88%, with the 2-year that's yielding 4.37%. Spot gold down 0.2%. 20.36 the ounce. Bitcoin up another 4.2%. 44,265 on Bitcoin. And West Texas Intermediate crude, a little change right now, 73.98 a barrel on WTI. Briefly after earnings, FedEx shares plunging 10.8% after the bell today. Micron Technology lower by 2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you for the look at the top stories in the markets. But the top story in politics today very much is that court decision out of Colorado. The state Supreme Court ruling that former President Donald Trump is ineligible to be president because of his actions in what they say was inciting insurrection at the Capitol on January 6, 2021. This was a 4-3 decision. The majority writing, quote, President Trump did not merely incite the insurrection. Even when the siege on the Capitol was fully underway, he continued to support it. And what this comes down to in terms of the legal question here really is the 14th Amendment. which says that no one can hold public office who is engaged in insurrection or rebellion. And this is actually a question that President Biden himself had to address today when a reporter asked him about it. Here he is.
Well, I think certainly they're self-evident. You saw it all. Now, whether the 14th Amendment applies, I'll let the court make that decision. But he certainly supported insurrection. There's no question about it. None. Zero. And he seems to be doubling down on about everything.
Joining me now for more on this is Gregory Cordy, who is one of our great politics reporters here at Bloomberg. So, Gregory, we just heard the president say it's self-evident. It was insurrection. Issue is President Trump, former President Trump, has been charged with many things. Insurrection is not one of them, and he's been convicted of nothing. So how does this work?
So the 14th Amendment was passed, was adopted by Congress and the states and incorporated in the Constitution after the Civil War, when we had all these Confederate officers returning into the fold, and the idea was that they shouldn't be able to hold office, certainly in Congress, if they had sworn to uphold the Constitution and then they were traitors to the Union cause. And so now we're applying that 150, 160 years later, right? In an unprecedented case, we've never, in all that time, we've never gotten this before. And so there's a lot of questions, a lot of legal questions here. One is, what is the definition of insurrection? How does that apply to what happened on January 6th? Can we say that then President Trump engaged in that insurrection on the Capitol when he wasn't physically at the Capitol?
Right.
But also, does this apply to the office of the President of the United States? There's an argument that it doesn't. Who enforces it, right? Does Congress enforce it, or does the Colorado Secretary of State essentially enforce it by determining whether or not he can appear on the ballot? And so all of these are brand new questions that, because they're novel questions, the Supreme Court of the United States will almost certainly have to take this up.
Well, the Colorado State Court has stayed this decision until January 4th to give Trump that opportunity to appeal it to the highest court in the land, and he has said he will do so. So it's very, very likely that this is going to come down to 9 justices, 3 of which Trump appointed. Is the feeling here in Washington today essentially that the Supreme Court of the United States is going to overturn the Supreme Court of Colorado?
That's obviously unknown. I mean, if you have a political mind, you look at the composition of the court. It's a supermajority for conservatives, 6-3, and as you point out, 3 of those 6 were appointed by President Trump himself. But also, there's a lot of legal issues here, and one thing we do know about this John Roberts court is that it likes to decide cases on the narrowest possible grounds they can, and so they may try to find some procedural grounds. One of the issues that came up in the dissent in the Colorado case was the dissenting justices pointing out that President Trump really didn't have any right to due process here. As you point out, he's not criminally charged with insurrection. The 14th Amendment doesn't say explicitly you have to be criminally charged, but there is also due process built in the 14th Amendment, other sections of the 14th Amendment, that give people the right to be heard. And the question is whether or not Trump had an adequate defense here in the Colorado case. That could be a more narrow grounds for the Supreme Court to overturn this, but then that would open the floodgates for potentially a dozen different mini trials over the course of the next election year as different states that are trying to exclude Trump from the ballot basically put him on trial for insurrection against the United States.
Well, and with a lot of these crimes that the president has been charged with, the former president, 91 total felony charges across 4 different criminal cases. All of those legal issues to this point have just galvanized his base of supporters, really. This legal issue, though, could actually have an impact on his attempt to once again be seated in the Oval Office, right? If you're not on the ballot, how do you win the presidency if this grows larger than it is right now?
Yeah, and so that's certainly an argument that, say, Chris Christie, the former governor of New Jersey, has been making all along, is that Republicans shouldn't be putting all their eggs into the Trump basket at this point, because we don't know what the outcome of those criminal trials will be, 4 different criminal trials in 4 different jurisdictions. But then there's also this case of the 14th Amendment, and I should say that Chris Christie did come out last night and say this isn't his preferred way to do it.
Yeah.
He would prefer to beat Trump on the ballot rather than have a court decide whether Trump can compete in the first place. Yes, that's certainly been an argument that Republicans should begin to look at other options just because there's so many unknowns with Trump and his legal problems over the next year.
And it wasn't just Chris Christie who was saying leave it up to the voters, not the courts. Nikki Haley said something similar as well.
And Ron DeSantis as well.
Yeah. All right, Gregory Cordy, always wonderful to talk to you. Thank you so much for joining us. And if you have any more questions around the 14th Amendment, Gregory does have a great quick take piece out today, breaking it all down. So make sure to check that out. We want to get, though, reaction from Congressman Brian Stile of Wisconsin, who we are very lucky to say is joining us now. Congressman, obviously, it's been a big 24 hours in the legal Trump universe. What is your reaction to the decision out of the state of Colorado?
I think it's actually pretty simple. Voters should decide elections, not judges. And I think people are frustrated when they have to listen to all the legalese, debate back and forth, rather than just simply allowing voters to have their say in our upcoming elections.
So, Congressman, is it that you think the former president has done nothing wrong, or just that you think it should be voters that dictate whether or not he has done anything wrong?
The basis of our entire democracy is that voters get to choose who their elected representatives are. And when judges put themselves in the position of making those decisions rather than voters were moving in the wrong direction, let's trust the voters, put the decision in the hands of the voters. And I think we're far better off in our democracy.
Well, and it's voters that aren't just going to have to make a decision about who they want to be the president of the United States. They're going to be making decisions about who they want representing them all over the country at all different levels of office. And when you have just questions around whether a former president seen as the leader of the Republican Party incited an insurrection, whether he's even eligible to hold office, let alone all of the other rhetoric we have heard debated repeatedly over the course of the last several days, what does it mean more broadly for your party?
I think people are just simply frustrated with the fact that there's individuals that want to have their say override the will of the voters. I think people just want to simply go through this primary process, go through the presidential election, and let the voters make the decision as to who the next president of the United States is. Right now, President Biden is in my home state of Wisconsin with me here. Mm-hmm. He's in Milwaukee, touting Bidenomics. We should be talking about the economic policies, in my opinion, the failed economic policies of this administration, rather than allowing our entire conversation to be gobbled up by legalese. Let the voters speak. Let's actually talk about the issues that Americans are facing right now. And we're facing a lot of significant issues in this country that need to be addressed.
All right. Well, Congressman, since you brought it up, President Biden has just wrapped up his remarks in Milwaukee. He was addressing the Black Chamber of Commerce. You just were talking about Bidenomics and how it failed. I was taking a look at some numbers before the show. According to the latest figures we have from the Bureau of Labor Statistics, the unemployment rate in Wisconsin is lower than the national average, 3.2%. According to AAA, the average price of a gallon of gas is $2.76. That's down more than $2 from the high in June of last year. Inflation, as we know, has come down more broadly. So what's wrong with that?
Simply go to any grocery store in the state of Wisconsin with me and let's talk to the customers as they're checking out, recognizing that their grocery bill is up 20% since President Biden took office, and everything they're purchasing is up 17%. Wage growth going into the pandemic was robust, and across the board, people were moving ahead in their lives. Now, as we came out of the pandemic, what we've seen is stagnant or falling wage growth. Is inflation has outpaced wages in many cases. Families can't afford the things that they need. People are frustrated, and it's the economic policies of the Biden administration that has brought us here. Everything from his war on energy on day one, beginning with the killing of the Keystone XL pipeline and continuing on, is the president's policies of paying people not to work after the pandemic, massive multi-trillion-dollar spending bills that drove inflation. And the end result is if you speak to people here in Wisconsin, regular folks on the street, they're getting clobbered by Bidenomics, and they want to see Washington change course. And I agree with them.
So when you say Washington changed course, can we talk about what specific policies? Is this mostly on the tax side of the equation, knowing that this administration also has made a lot of investment into infrastructure with bipartisan support as well, investments in cleaner energy that are, at the end of the day, argued to reduce these inflationary pressures? What is it that needs to be done that isn't being done right now?
A lot of spending decisions are about prioritization. So it's just like your family budget. There's a lot of things you'd like to spend on, but at the end of the day, you come to the table and sit down and identify what your priorities are. Washington continues to fail to do that. And in particular, in the first 2 years of the Biden administration under Democratic one-party control, what we saw was massive spending bills where everything, including the kitchen sink, got into those bills, and that vast amount of new federal government spending in large part drove the inflation that clobbered people on the back end. And when you recognize that family budgets are stretched in large part because of 17% of cumulative inflation since the president came to office, explains a lot of the frustration, but it carries over into other areas. We could look at the median mortgage in the United States of America went from $1,200 a month to $2,400 a month, doubling over the course of the last 3 years. So if you come and speak to a young couple here in Janesville, Wisconsin, who's trying to move into their first home, trying to go from paying the rent to paying a mortgage, it just got a whole heck of a lot harder. And so getting inflation under control to allow the Federal Reserve to bring the interest rates back down is going to have a huge impact. You can't do that if you continue the inflationary policies that we've seen from this administration.
Just on the subject, Congressman, of the Fed bringing interest rates back down, how hard do you think the Fed should be cutting, knowing you're on the Financial Services Committee, and how soon?
Well, ultimately, that's going to be a decision for the Federal Reserve. I'm not going to supplant the Fed in their decision-making process, but as policymakers, we should be working on policies that assist the Fed to bring inflation down. There's a lot Congress could be doing that it hasn't. In particular, as we look at the war on energy and the impact that energy has had on driving inflation higher, we should be working to increase the domestic supply of energy here in the United States. Coming out of the pandemic, this administration was literally paying people not to work. The key there is to get more people into the workforce and assisting them in gaining the skills they need to prepare them for the jobs of the future. If we were focused in Congress on economic growing opportunities that would bring inflation down, it would allow the Federal Reserve to be able to bring that rate down faster.
It's just worth noting, because you've referenced the war on energy a few times here, that we got shale figures out just a few days ago. U.S. production of oil is actually at a record right now. But because you were just talking about the work Congress needs to do, obviously you're now at home. The Senate's heading out of town today. We have wrapped up the year of 2023, and we don't have top-line appropriations figures. We don't have a deal when it comes to border security and Ukraine funding. Congressman, how much are you dreading returning to all the work Congress has to get done in January?
Well, let me go on record in saying I was disappointed that we all left Washington, D.C. We should have kept Congress in place to get that work done. It's far too important to take the break that Congress is doing. That said, when we come back, we have a ton of really important issues. Probably number one on that list is, as you noted, the top line number for appropriations is still not agreed to. That makes me more and more concerned every day as we head towards the next potential lapse in funding in mid-January. And so we got to get our act together. Congress has been abysmal this year working with the president to get things done. I remain probably as frustrated as anybody. We have some huge topics on the table when we return in the new year.
When we think about those top-line appropriations figures, would you be encouraging Speaker Johnson and Republican leadership to stick to what was agreed to in the debt ceiling deal midway through this year? Are those the numbers we should be working with here?
Well, why we're having this difficult debate after we passed the legislation that said, here are the top-line numbers, and now we have Senator Chuck Schumer trying to increase that number unilaterally is beyond frustrating. And so the fact that we reached an agreement across the board, bicameral, bipartisan deal to say, here are the top line numbers to actually get spending under control. And then we're allowing Chuck Schumer to hold us all hostage as he tries to rework that negotiated deal and increase total spending is frustrating. The Appropriations Committee has a ton of work to do between now and our opportunity to pass that legislation on the House floor. I'm concerned we're going to be in a position to either A, kick the can down the road, or a worst case scenario where we would allow government funding to actually lapse.
So there's the shutdown question. There also is the question around supplemental funding, and we have about a minute left, Congressman. How confident are you that a deal can be made on the border? And is the House willing to give the White House a win potentially on border security?
I think the focus is let's get a win for the American people. The border needs to be secure. We have an opportunity to do that. The House passed comprehensive border security legislation in H.R. 2. The Senate has yet to take it up. I think we have a big opportunity here to leverage potential supplemental funding to actually get the border secure. I'm less concerned about who gets the win other than making sure the American people win. And the American people win if we truly secure the U.S.-Mexico border.
All right, Congressman, always great to talk to you. Thank you very much for joining us. And if we don't see you beforehand, happy holidays to you and a very happy new year. We'll look forward to having you back in 2024. That's Congressman Brian Stile, the Republican from Wisconsin and chair of the House Administration Committee. And as I mentioned, also on financial services. We still have a lot to get to. We got to talk geopolitics as well. What's happening with freight and trade in the Red Sea? So we're going to get to that conversation coming up next.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are now trading mixed. We have got both the S&P 500 index and the NASDAQ 100 index both trading lower. This Bloomberg Business Flash brought to you by Glenmead. Glenmead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more. The Dow up 16 right now. Little changed, up less than 0.1%. Earlier gains for the S&P now fading, down 2 points. Little change there. NASDAQ, the composite index, up 21, up 0.1%. The NASDAQ 100 index is also little change right now, down by 2 points. 10-year yield 3.87% with a 2-year that's yielding 4.37%. Wisconsin Republican Congressman Brian Stiles says Congress needs to do more to help the Federal Reserve bring inflation down.
Well, ultimately, that's going to be a decision for the Federal Reserve. I'm not going to supplant the Fed in their decision-making process, but as policymakers, we should be working on policies that assist the Fed to bring inflation down. There's a lot Congress could be doing that it hasn't. In particular, as we look at the war on energy and the impact that energy has had on driving inflation higher, we should be working to increase the domestic supply of energy here in the United States.
Stiles was interviewed moments ago by our Kaylee Lines right here on Sound On. He is a member of the Financial Services Committee. He also alluded to energy, and West Texas Intermediate crude oil right now is trading higher. WTI up 0.3%, 74.12 a barrel. Spot gold right now down 0.2%, 20.36. After the close of trading today, we hear from Micron Technology. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Welcome back to the fastest show in politics. I'm Kaylee Lines. Joe Matthew taking a well-deserved day off, but we still have much to talk about when it comes to domestic politics and geopolitics as well. And that's where I want to get to the issue, the situation in the Red Sea. Yemen's Houthi rebels today vowing to continue targeting ships in that crucial waterway, despite the U.S.'s move earlier this week to create a new maritime coalition to try to protect these merchant vessels in the area. But of course, we've seen many of those vessels, because of the threat of potential attack, decide they're just not going to touch the Red Sea. They're not going to go through Egypt's Suez Canal, and instead they're going to take the long way around the coast of Africa. And that means could create extra delays and extra costs as well. We wanted to get more on this, so pleased to say joining us now is Lee Klaskow, Senior Freight Transportation and Logistics Analyst over at Bloomberg Intelligence. He is also the host of the BI Talking Transports podcast. Lee, thank you so much for joining. You're really the perfect person to talk to about this. Just give us a read on the situation as it stands. How bad has it gotten because of what's happening in the Red Sea? How much is it roiling seaborne transport at this point?
Yeah, I think you're seeing, a major shift of ship owners looking to, mitigate the risk, not only to their crews and cargo, but obviously their assets. A container liner ship can cost up to $100 million. So these are expensive assets that are on the water. And they're moving away from the Suez, going, like you mentioned, south along Africa down to the southern tip of Africa and up and around again. That can add 10 to 12 days to Europe, depending on how fast the ship is moving, and that will create delays of up to 10 and 12 days, and that can create bottlenecks at the ports because the timing of those ships is now getting jumbled because a lot of ships are changing course.
Well, so you talk about delays at ports. I think for a lot of us, this gives us flashbacks to what was happening in COVID, the supply chain snarling we were seeing. It was Christmas time a few years ago when everyone was panicked about whether or not the presents they had ordered were going to arrive on time. Are we likely to face a similar kind of situation just as a result of this in particular, or are we now seeing supply chains normal enough everywhere else that it won't reach those same extreme levels?
Well, the good news is that we're kind of entering a seasonal lull. So this is happening, when we're at least thinking about the container market. Obviously, it's different when we're looking at dry bulk or tankers, and then there's crude tankers, product tankers, LNG tankers. So, but when we're looking at the container liner industry, we're kind of coming, like I said, into kind of a seasonal slowdown, because hopefully all the presents that you got are under the tree by now, and if not, you better get to the store. But so I think that, to your point, is it going to snarl the supply chains? My answer is no, because some shippers might decide, well, maybe it makes more sense to use air freight, and there's plenty of air freight capacity out there that they could use. And And again, there is plenty of ocean capacity. The liner market is really dealing with a lot of slack capacity, and this is actually a net positive for the liner industry because rates are extremely depressed. They're up significantly since October due to what's going on in the Red Sea. But just from get an idea, so to ship a container from China to Rotterdam, it would cost around $14,000 to do that. And that was in the heights of 2021. Fast forward to today, it's around $1,400. So from $14,000 to $1,400.
Wow.
So that's significantly lower. And back in October, it was below $1,000. So the container industry, they're not making any money. They're probably not going to make any money through 2025 because of the fact that rates are so depressed and there's a lot of capacity coming on the water in the next 2 years.
Okay, but when we think about rates, and as you say, they have moved higher, even if it's from depressed levels. If we think about the extra fuel it's going to take to go all the way around Africa, those added weeks to journeys, if we think about potentially higher insurance costs, potentially because of areas of conflict, if you add all of that up, how much upward pressure do you realistically think we're going to see on rates just as a result of what we are seeing in this region right now?
I think this is going to be inflationary hard stop, but the reality is it's not going to be like we were in 2021 or 2022 where the rates were, ridiculously, unsustainably high. And I don't even think we're going to get halfway there. Maybe depending on the route, it could go up another 10, 20%. But again, rates are currently pretty depressed. They've been deflationary over the last 12 months. For a lot of shippers, and also fuel prices have gone down too. But to your point, yes, it is going to cost more money because those 10 to 12 days on sea are not cheap, and it does take not only more fuel, but also ties up assets and crews as well.
Well, and that fuel itself could potentially get more expensive if you're seeing real disruption in the movement of petroleum, as we've seen, BP and others deciding they're not going to go through the Red Sea and Suez Canal either. We talked about oil prices and kind of the impact of that, but I want to talk about some other price action today if we can, Lee, because this is another area of your coverage. FedEx is a big mover in today's trade, down about 11% after earnings. What is that telling us about the health of FedEx in particular, or freight more broadly?
Yeah, so I think this is more of a FedEx story than like what's the takeaway for the consumer or the economy, because a lot of people like to look at FedEx and UPS and try to guess where those areas are going from how well they're doing or how poorly they're doing. With FedEx, it was really about their express business. Their express business disappointed significantly. Their EBIT margins or operating margins were below 2%. It was about 220 basis points below what consensus was at. The company has initiated a lot of cost-saving plans, initiatives and strategies that they call Network 2.0 and their Drive initiatives. And you're just not seeing it hit the bottom line. And they also announced on their earnings call that they're going to kind of redesign their fleet, their air network, into a priority network, a kind of deferred network, and then a network where they're going to be leveraging third-party capacity to ship goods, because at the end of the day, not everyone needs, that thing that you order online the next morning. Sometimes you can wait a day or two, and they're trying to kind of build density and take out costs by, kind of, I guess, changing their networks to the market realities of consumer demands.
All right, Lee, it's always great to get your insight. Really appreciate you joining us, not just on the FedEx story, but the crucially important one in the Red Sea as well. That is Lee Glasgow. He is Senior Freight, Transportation, and Logistics Analyst at Bloomberg Intelligence and the host of the BI Talking Transports podcast. Really important conversation to have. But we also have gotten some important news that crossed the Bloomberg terminal just moments ago. Former President Trump, whose legal troubles we have talked about at great length already on this program, has urged the Supreme Court not to fast-track his D.C. immunity claim. Remember, this is Special Counsel Jack Smith has requested that the Supreme Court have fast-track consideration of Trump's claim that he is immune from prosecution as the former president. This is in relation to the 2020 election case here in Washington, D.C. Trump has urged the court to reject that request now for fast-track consideration. He says the court should hold off on intervening in this case against him. Trump's lawyers arguing, and this is a quote here, "The special counsel identifies no compelling reason for the extraordinary haste he proposes." This is just one area in which the Supreme Court could be highly influential in terms of the former president and the 2024 election, because, of course, as we have already discussed at length today, it is very likely the Supreme Court is going to hear the case that was just decided in Colorado yesterday related to former President Trump being taken off the ballot, as the state Supreme Court there ruled he is ineligible to be president because of the 14th Amendment and his actions in what they say was inciting insurrection at the U.S. Capitol on January 6, 2021. So we'll have much more on this story coming up. The host of Bloomberg Law, June Grasso, is going to join us in just a few moments. But first, let's get some other news from the world and national news as well. Scott Carr has that in the Bloomberg 99.1 newsroom here in Washington. Hey, Scott.
Thanks, Kaylee. 10 Americans who had been detained in Venezuela have been released as part of a prisoner exchange. Earlier reports said Venezuela had agreed to release 36 people in total, including at least 8 Americans, in exchange for a close ally of Venezuelan President Nicolas Maduro. Some of the Americans released have been designated as wrongfully detained by the State Department. The Maduro ally being released is Colombian businessman Alex Saab, who was charged with money laundering in Florida in 2019. Defense Secretary Lloyd Austin made a surprise visit to the USS Gerald R. Ford aircraft carrier today to meet with sailors he'd ordered to remain at sea, with the goal of preventing the Israel-Hamas war from spilling over into a deadlier regional conflict. At a year-end news conference today, Secretary of State Antony Blinken said the U.S. expects to see Israel move to a lower intensity, more targeted phase of operations in Gaza, though he didn't mention a timeline for that shift.
That's really focused in on dealing with the leadership of Hamas, the tunnel network, and a few other critical things. And as that happens, I think you'll see as well the harm done to civilians also decrease significantly.
This as Houthi rebels based in Yemen today vowed to continue targeting ships in the Red Sea, despite a move by the U.S. to create an international naval force to protect ships in that region. The Iran-backed group also warned Washington it's willing to retaliate if the U.S. were to opt for military attacks on Houthi bases. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg.
Connection lost.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Major change for the U.S. equity market since our last update. The Dow, the S&P, NASDAQ 100 index, all in the red, all trading lower right now, with the S&P down 14. Lows of the day drop there of 3.3%. All the selling coming in the final in the past few minutes of trading. The Dow now down 62, drop there of 0.2%. NASDAQ, the composite index, down 31, drop there of 0.2%. NASDAQ 100 index down 54, a decline of 0.3%. 10-year yield at 3.88%. The 2-year now yielding 4.38%. Spot gold down $5.50 the ounce to $20.35, drop there of 0.3%. And West Texas Intermediate crude gaining 0.6%, 75.47 a barrel. Positive news on home sales and mortgages as we hear from Bloomberg's Vinny Del Giudice.
Existing home sales bounced back from a 13-year low in November. The data tracked contract signings. Southern states led the gain. Though loan rates are below 7%, they're twice as high as 2 years ago. Last week, the 30-year mortgage rate fell to 6.83%, the lowest since June. The National Association of Realtors provides the sales data. The Mortgage Bankers Association provides the loan data. Vinny Del Giudice, Bloomberg Radio.
Among home builders, KB Home up just about 0.1%. Lennar up 0.1%. And Pulte Group, the old Pulte Home, it is up by 0.3%. Again, recapping stocks lower. S&P down 12, drop there of 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
I'm Kaylee Lines in for Joe Matthew today. And yes, we call this the fastest show in politics, and headlines certainly are flying fast today. We just got news from former President Trump and the Supreme Court. The former president saying the U.S. Supreme Court should hold off on intervening in the federal criminal case against him over his efforts to overturn the 2020 presidential election. Remember, Jack Smith is the special counsel who brought these charges against Trump here in Washington. He has asked the Supreme Court to weigh in, fast-track consideration on the former president's claim of immunity from prosecution. But former President Trump and his legal team today are saying the court should not do so. His lawyers arguing the special counsel has identified no compelling reason for the extraordinary haste he proposes. They say in their filing the only injury the special counsel asserts in this appeal, possible delay of the trial date, remembering he's trying to take this to trial in March, even if it is cognizable at all, is not caused by the district court's decision in the prosecution's favor on all issues. Let's bring in a real expert on this now to help break down what this means for this case. Lawrence Tribe is joining us. He is the Carl M. Loeb University Professor of Constitutional Law Emeritus at Harvard University. He has also served as lead counsel in 36 Supreme Court cases. So, Professor, thank you very much for being with us here. Are you surprised that the former president is asking the court not to weigh in on this in an expeditious manner?
Well, I'm not surprised, Kaylee, because that's his go-to strategy. Delay, delay, delay. But he is contradicting himself. Usually, when you have an argument about what's wrong with a criminal prosecution, you wait to see if you're convicted, and then you have an appeal. In fact, that's usually the only time you can raise an issue. Here, the president, former president, I call him president because that's what he insists on calling himself. But here, the former president is the one who said, hurry up. Every minute that this indictment hangs over my head, claiming that I tried to seize power after losing an election, every minute that I am accused of the crime of obstructing Congress is a minute that I'm irreparably harmed. I'm entitled to go up and get a court to decide right now that Tanya Chutkan is wrong in putting me on trial, because as a former president, I should never be on trial for anything I did. And besides, it's double jeopardy since I wasn't convicted by the Senate. They're very weak arguments, but normally you would wait. In his case, he says, don't wait. Rush, hurry. Consider it now. Oh, you want to really hurry? Rush? Oh, I take it back. Slow it down. That's ridiculous. He can't have it both ways. If he has a right, and he does, to have this appeal considered immediately, then the government has the right to step on the gas and not the brakes and have it considered really immediately. Why wait to see what the Court of Appeals says? These are purely legal questions. The Court of Appeals has no special expertise. Whatever it says is going to be subject to review by the U.S. Supreme Court anyway. There's no reason to wait. His own arguments are the reason not to wait. And, of course, it's hugely important that it be decided so that voters know when they're going to the polls whether they're voting for a convicted felon or for someone who was wrongly accused. There's a huge, overwhelming national interest in resolving that question before the election, indeed before the Republican convention.
So, Lawrence, if all of this comes down to timing and understanding, you think these are contradictory arguments here that the former president and his legal team are making, what do you make of their argument that essentially the special counsel's assertion that the injury is possible delay of the trial date is not adequate enough injury when he's seeking a trial date that is just less than 3 months away? March 4th is when Jack Smith would like it to begin. What do you make of that argument in particular? And also, do you think a March trial is realistic, knowing, as you said, that the former president and his legal camp tend to delay in every way they can?
Well, it's realistic if his attempts to delay are turned down. And in this case, there is no basis for delay. He says there's no good reason for the trial to occur in March. Why not hold it after the election? Well, we know that that's ridiculous. People then won't know whether they're voting for a convicted criminal or not. And if he happens to win or manages to act as though he has won the election, then we know the first thing he does after he is sworn in is get rid of this prosecution, fire the attorney general who brought it, pardon himself. So it's overwhelmingly important if people are to be accountable under the law, if no one is above the law, that people not be able to delay a trial until it's too late to have a trial. The old saying.
So, Lawrence, on that point of no one being above the law, really the root of this question is whether or not a former president of the United States can be prosecuted. So in your legal opinion, the answer is yes, just as any other citizen can.
Absolutely, and I expect the U.S. Supreme Court to agree as well. Otherwise, a sitting president can just shoot someone on Fifth Avenue, maybe a familiar example. And as long as he does it while he's president, he can never be prosecuted. That can't be the law. And if he says, oh, well, but this wasn't shooting someone, it was just trying to hold on to power, that's also not part of the president's job. So it's absolutely crucial, if we're going to have a democracy and the rule of law, that he be held accountable, that anyone be held accountable. And as I was earlier saying, justice delayed is really justice denied in this case. Whether you think he's guilty or innocent, we're entitled to have the answer from a jury of his peers in a trial that begins on schedule on March 4th or soon thereafter. And that requires that the U.S. Supreme Court expedite this.
So what you're describing, though, in terms of the rule of law, a jury of peers, actual conviction or not, this is due process, right? This is how the system works. So I'd like to get your thoughts on another matter very much in the news today. The Supreme Court of Colorado ruling that former President Trump should be removed from the ballot in that state because he incited the insurrection at the Capitol on January 6, 2021, and in doing so violated the 14th Amendment of the Constitution. What do you think of that ruling, knowing he hasn't even been charged with insurrection, let alone convicted of any federal crime?
Whether you're charged or convicted has everything to do with whether you should go to jail. It has nothing to do with whether you're disqualified. The whole point of putting in this democracy protecting provision in the 14th Amendment after the Civil War was that people who are found in a fair proceeding, and the week-long trial that Colorado held in this case was a very fair proceeding. The president had every opportunity to put in evidence. If you're found after a fair proceeding to have taken an oath to uphold the Constitution and then turned against it by engaging in an insurrection against the Constitution, you can't be trusted with power again, because that's the path to destroying democracy. That's why that provision is in there. It has nothing to do with whether you are tried and convicted of a crime or held civilly liable. The president had a week of detailed hearings. There were 298 factual findings made by the trial court in Colorado. They were not upset on appeal. None of the justices of the Supreme Court of Colorado, including the ones who dissented on different grounds, found any fault with those findings. And now it's time for the U.S. Supreme Court, which is certainly going to have to decide that case as soon as the former president asks it to do so. It's time for the U.S. Supreme Court to weigh in on whether he is disqualified under those provisions of the 14th Amendment.
And knowing that this court is a conservative supermajority, frankly, there's 6 conservative justices, half of which were appointed by the former president. What way would you expect the Supreme Court to rule on that matter?
Well, I don't have a crystal ball. I think as they follow the law, Judge Michael Ludig, a very distinguished conservative, and I think they will have to affirm the decision and render an unexpected, perhaps in many ways unpopular ruling that keeps them off the ballot. They find some way consistent with the 14th Amendment and their oath to the Constitution, some exit ramp, some way of not keeping them off the ballot. I don't really see what it could be, but it's a pretty ingenious court, and they have found ways to do some pretty strange things.
All right. On that note, we will leave it. Thank you very much for hopping on with us on this breaking news. We really, really appreciate your legal insight. That was Lawrence Tribe, Professor Emeritus of the Carl M. Loeb University, Professor of Constitutional Law at Harvard University. We sincerely appreciate it. Now, of course, while the former president and his many legal trials and tribulations have always been front of mind for us here in Washington, there are some other really important issues that we weren't covering extensively a few months ago that have kind of fallen off, but it is important that we return back to them. One of them being the issue of childcare. Remember, September 30th, we went over the so-called childcare cliff, where government funding and subsidies that were introduced during the pandemic abruptly stopped. And now we're facing this reality where childcare is a very real problem for many American families. And this is the subject of a great new piece out by Bloomberg Equality reporter Kelsey Butler. You can find it on the terminal and online, but I'm pleased to say Kelsey has joined us now. Kelsey, the headline of your piece: childcare costs are at $56,000 and forcing parents into side hustles. $56,000, really?
Yes, and want to point out that that is for in-home care in San Francisco, so obviously a city-specific number there. But across the country, parents that I talk to are seeing childcare prices even for things like a daycare center, not a luxury service like a nanny, run more than college tuition. It's absolutely mind-boggling, the numbers, and they've really grown exponentially since the start of the pandemic. According to Bank of America customer data, up 32% from 2019 as of September.
It's really just incredible numbers. And you talk about the things that parents are now having to do to cope with this. Side hustles, maybe actually directly working at some of these care facilities. Some of them are doing, but are we seeing evidence yet that more parents are choosing instead just not to work, stay home and take care of the kids, because it's almost like you lose money to keep a job but then have to pay for childcare?
That's absolutely a really big concern. I mean, economists that I've spoken to have said that this is something that they're really watching, especially as we saw labor force participation for women from their 20s to their 50s hit a record over the summer. And we really think that this is something, childcare, that could imperil some of those gains. It's still early days on some of these really big price spikes that we're seeing, and we know that that is often a very last resort for parents. They're often going to do things like tap family, try to rearrange their work hours, do some of these kind of side hustle, creative things that I talked about in the story before making that step to ultimately leave the workforce.
Well, I would imagine all of this is made harder by the fact that we're now, in the post-pandemic area, and everyone who had the privilege of working from home the majority of the time might not anymore, as companies call people back to the office. How much is that adding to these pressures, Kelsey?
That's absolutely a really big pain point. We've seen, CEOs of big banks, major tech companies say that return to office is not going to work for them and call workers back. I did talk to a really interesting subset of people and maybe got some tips for myself too about parents that are working from home and also taking care of their toddlers. This is absolutely mind-blowing. On TikTok, there are a lot of people hashtagging content, WFH Mom, over 36 million views in just October and November alone, of people that, some with and some without their company's blessing, are working and also caring for their child.
Kelsey, is there any sign that any of this is going to get better anytime soon?
I hate to give a negative answer, but we're really not seeing any indicators that things are going to get better. I think things are going to get worse before they get better. As you touched on, pandemic-era funding ran out at the end of September, and obviously October 1st, we didn't have a ton of centers that closed, but it's going to be a drip. There's been some analysis from the Century Foundation that said something like 70,000 centers are due to close in the near term, and that's going to leave 3.2 million kids without spots in daycares. And as we really see a lot of gridlock in Washington around this issue, without the government stepping in, I don't really see a path for improvements, at least in the near term.
All right, it might not be the most optimistic outlook on this, Kelsey, but that just makes it all the more important to talk about. Really great story and really great insight. Thank you so much for joining us. Again, that's Kelsey Butler, Bloomberg Equality reporter, and you can find her work on the terminal and online. Now let's get a check on what else is happening out there in the world and national news now with Scott Carr in the 99.1 newsroom here in Washington.
Kaylee, 10 Americans who had been detained in Venezuela have been released as part of a prisoner exchange with that nation. Earlier reports said Venezuelan President Nicolas Maduro had agreed to release 36 people, including at least 8 Americans, in exchange for Maduro's close ally Alex Saab being released, who'd been charged with money laundering in Florida in 2019. The State Department says some of the Americans being released had been designated as wrongfully detained. Donald Trump is today urging the U.S. Supreme Court to hold off on intervening in the federal criminal case against him over his efforts to overturn the 2020 presidential election. Trump urged the court today to reject special counsel Jack Smith's request for fast-track consideration of the former president's claim of immunity. Smith is seeking to ensure the trial can start as scheduled March 4th. He's asking the justices to directly review a federal trial judge's rejection of immunity. Secretary of State Antony Blinken is defending the U.S. position on the Israel-Hamas war. During an end-of-year news conference today, Blinken said Israel's got a right and obligation to defend itself against Hamas. Israel and the U.S. have faced international criticism for resisting calls for a ceasefire as the civilian death toll rises. Blinken questioned why the international community is not demanding Hamas lay down its arms and surrender. Airports will be packed over the holidays. AAA is predicting this season will be the busiest ever for air travel, with tomorrow and Friday likely to be the most active days for departures. The record for airline travelers was set back in 2019 when over 7 million flyers crowded the airports. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg. Kaylee.
All right, Scott, thank you so much. We've had a lot of news to deal with this hour. Many legal developments in the case of former President Donald Trump, who has asked the Supreme Court not to fast track what Jack Smith, the special counsel here in Washington, would like him to fast track the decision whether or not the former president is immune from prosecution, given his role as the former president. The Supreme Court also, of course, having to consider potentially very soon the Colorado State Supreme Court's decision to kick Trump off the ballot on the grounds of the 14th Amendment. We're going to have much more coverage on this for you coming up on Balance of Power. We'll be speaking with a former Watergate prosecutor, Nick Ackerman. We're also going to get some insight into what's happening in the Red Sea with Amos Hochstein, who, of course, is really crucial in energy policy out of the Biden administration. So make sure to tune into that tonight, as you can every night, 5 p.m. Eastern time here on Bloomberg TV. But there's more coming up on Bloomberg Radio. Thanks for joining us on Sound On. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a good afternoon, everyone. Live from the Bloomberg Interactive Brokers studio, streaming on YouTube and Bloomberg Originals. It's Wednesday, December 20th, 2023. I'm Tim Stenevec, along with my co-host for the afternoon, Bloomberg Equities reporter Bailey Lipschultz. Bailey, good to see you.
Good to see you, Tim. The market's not really excited that I'm co-hosting in Carol's place, but what
hey,
can you do?
You know, it was excited.
Yeah,
flipped lower. Just a sudden reversal. Hey, we're going to be talking all about that in just a minute. We've got a great roundtable coming up. Liz McCormick is going to talk macro with us, and we got Abigail Doolittle talking equities. We're going to check in with them in just a few minutes. Meantime, Bailey, we got a great program. We're going to dive into the implications of Colorado's unprecedented ruling. We're talking about Donald Trump being ineligible to serve as U.S. president because of his actions inciting the January 6th attack on the U.S. Capitol. That's at least according to the Colorado Supreme Court. We're going to dive into the legal and political implications of the ruling.
Going to be a lot to unpack. I'm really excited about that conversation.
Yeah, we got the legal side with June Grasso, and then we got our folks in D.C. helping us out, Jody Schneider, with the political side of that. Also, researchers are making headway when it comes to longevity. In fact, the biggest breakthrough in longevity may start with menopause. It's the cover of the new issue of Business Week magazine. And also, we're talking about the private equity firm that's tapping into America's spring water. Experts worry that sensitive springs, creeks, and groundwater supplies from Florida to California are paying the price. And believe it or not, it's actually earnings season still.
It's still
Is it
keeps
always
going
earnings
on.
season?
It always is.
We're like
seemingly-
talking about the big banks starting to report earnings in January, and we still got Micron after the bell today.
The thing that's interesting to me is it's always big tech somehow. Like we forget retailers roll through, but Micron is one of the bigger semiconductor stocks.
Yeah, we'll bring that to you live after. And Bailey, I interrupted you. You were going to say something about spring water.
Spring water. Well, you know, you're a Californian. I'm a Californian. Droughts.
Like we grew up being told not to drink bottled water.
Exactly.
Yeah, yeah. I wasn't even allowed to play with squirt guns or water balloons when I was a kid because there was such a water shortage. Also, happy anniversary, Tesla. That's the S&P 500 anniversary. It's been 3 years. So would you have been better off investing in the S&P 500 index fund versus investing in Tesla over the last 3 years? You can kind of guess. We're going to tell you, though, a little bit later in the program. We also got to check on retail this holiday season. We've got the National Research Manager for Retail Services on from Colliers with us a little bit later in the program. As Bailey mentioned, we are seeing the S&P 500 lower by a full percentage point right now, as is the NASDAQ Composite, while the Dow Jones Industrial Average right now down by about 0.7%. We're going to dive into markets in just a minute. First up, though, let's bring in our TV colleagues. Bloomberg's Countdown to the Close. Well, it starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
And right now, this is the countdown to the close. Romaine Bostic alongside Katie Greifeld. We're joined right now by our colleagues. Tim Stenovic, joined today by Bailey Lipschultz in for Carol Masser. Welcome to our audiences across our platforms on Bloomberg Television, Radio, Originals, and our partnership with YouTube. It felt like the conversation, Tim Stenovic, maybe just 30, 40 minutes ago was going to be a bit different here.
Yeah.
We had an extension of that rally. That's a reverse in a big way with all the major indices right now at session lows.
Yeah, good reminder that stocks don't always just go up. In fact, our own Abigail Doolittle, markets reporter for Bloomberg News, pointing out just moments ago in an email, this is the biggest decline that we've seen in the S&P 500 since October 27th, Bailey, and that was the first time that we'd actually seen the rally begin that we've been talking about with the S&P 500 up just roughly about 15% since then.
Everything seemingly going up and to the right. So many traders more than happy to downplay what the Fed had been saying to push back against Jay Powell's dovish comments. But now it does seem like volume is ticking higher, Katie, and that could maybe put a dent in the Santa Claus rally that normally should be coming around in the coming days.
And I mean, I just feel like when we're talking about big moves in the final hour of trading or so on December 20th, we should approach this with a grain of salt, whether there is anything fundamental here, whether this is more technical, position driven, but quite a big reversal hasn't been matched by the bond market, which also creates a little bit of a question mark as to what's really going on here.
Yeah, still a lot of questions, though, about the health of the economy and, more importantly, kind of the pace of inflation and I guess some of the pockets of inflation that are still out there.
Yeah, that's certainly true. I mean, one thing that I've been thinking a lot about as a parent is, and this story really struck a chord with me, is the cost of education. Not just the cost of, like, you know, how much it costs to raise kids and take care of kids, but how much it actually costs to send them to college, because we're trying to save money in the old 529s right now, but it's kind of unfathomable to think how much tuition is going to go up. Well, the Wall Street Journal, they covered this today in an interesting way. They talked about the rising cost of college, not from the perspective of tuition, Bailey, but actually the rising cost of college from the perspective of housing. And it turns out a big portion of the inflation that we've seen in overall college prices has to do with where these students are living.
Yeah, and that's coming from that report looking at a dozen public colleges across the country going back 20 years. They found that the least expensive housing option, median increase, was about 70%, Tim. Cheapest housing option at Binghamton, which is an hour and change south of my alma mater, Syracuse, more than doubled over that span, topping $10,000 for 2 semesters in a shared room. Looking at my alma mater, Katie, Syracuse, close to $8,000 a year if you're the cheapest room. That's an open triple with 2 other people, and that doesn't even factor in the amount of money you're paying to eat in the dining hall.
What is Bailey talking about?
He went to Syracuse.
Obviously.
Go Orange.
He's only dropped that name like 12 times.
You got to have, like, the workout facilities within the dorm rooms. You got to have the pools, you know, near the dorms, Katie, because we're talking college
These
here.
are some fancy schools.
Yeah,
it sounds
back
like
in my
it, right?
day.
Yeah,
Tim, you're really planning ahead here because you have
to.
little kids. But let's bring it a little bit closer to home because there's another really fascinating story on the terminal about child care costs. Some startling data in here. If you take a look at the average cost in the U.S. for full-time in-home infant care, such as a nanny, it clocks in around $1,000 per year. And as a result, Kelsey Butler, of course, on our print team, writing and reporting that a lot of parents are basically putting on side hustles when it comes to driving for a ride share service or working part-time at a daycare, et cetera, because the cost of actually, caring for your small child is going up and up and up. Tim, I'm not sure.
Tim okay? Is he?
I don't know if you can see, but I'm like sweating a little bit right now.
Go down the side of his face.
Still smiling.
You know what's frustrating about this?
Yeah.
Okay, back in 1986 was the first year that Congress allowed you to, use pre-tax money, put away pre-tax money for a dependent care FSA. The limit that Congress set back in 1986 was $5,000. You know what that limit is today in 2023? $5,000. It is not indexed to inflation.
I'm going to send you a story, Tim. Okay. About exactly why this program was designed to fail.
Oh. Wow. Is it depressing?
Yeah.
Okay. All right. Well,
I'll send it to you.
Can you send it to me? All right. I got to go. I'm going to read the story.
I think we have to go.
I'll read
we got a show to do here on TV.
Yeah, we do too.
It's a whole thing.
We got to talk
they got
about
cameras and lights and everything. So it's expensive.
All right, well, don't go anywhere.
You think childcare?
We're going to be back with you guys in just a few minutes. We cover everything from childcare all the way to college and everything in between. That is going to do it for now. We'll be back together live on TV, radio, and YouTube. Also on Bloomberg Originals.
It gets better, right?
It does it? All right, 4 p.m. for Beyond the Bell coverage. We're going to take you through today's. Understanding the sudden sell-off that we're actually seeing right now. The S&P 500 down 1.2%, the NASDAQ down 1.3%, the Dow down about 1 full percentage point. We're going to take a look at bond yields as well, because our roundtable includes Liz McCormick, Chief Correspondent for Global Macro Markets. She joins us on Zoom from New Jersey right now. Also with us here in the Bloomberg Interactive Broker Studio is Abigail Doolittle. She's markets reporter for Bloomberg News. Abigail, what do you make of this sudden reversal in the buying that we've been seeing throughout the day?
This is pretty amazing, but as you know, when I walked into the radio studio, I tried to be as quiet as possible, but I was excited with my hands out. We have something to talk about.
Finally, right?
Finally, after so many days of just sort of tiptoeing to the upside, all of a sudden, out of nowhere, we have this decline, somewhat sizable too, down 1.1%, the worst day, as you pointed out, since October 26th. And moments ago, October 25th. If we go down more than 1.4%, and the reason I point that out is in a last hour of trading like this, you never know what's going to happen. It would be the worst day potentially since September. As for the why, I'm digging into that. 1 point could be prior to this reversal. The S&P 500 before had been up, I think, 0.2% The RSI was the most overbought going back to 2020.
Okay.
So that's a way of saying too far, too fast. And it seems as though maybe in this, lighter holiday trading, some profit taking push around this reversal. I also am just opening up my email here because one of the better traders out there, he is responding to me right now, and he's saying not seeing, this is Chris Murphy over at Susquehanna, not seeing any good reason for the sell-off, but one thought could be, given the speed of the recent gains, too far, too fast, why risk holding on for more upside when you can trim some gains and protect against low volume pullback next week when everybody's on vacation? So that would be sort of
okay, so basically being a little bit defensive and taking some of the gains when you're up 23% for the year.
Yeah, and if you think about the NASDAQ's up 19% over the last 6 weeks, the Russell 2000 up 23% over the last 6 weeks. So yeah, why not lock some of it in?
Well, yeah, I'm wondering, Abigail, I'm looking at the Magnificent Seven index. It's pretty much in line with the S&P 500. Would we be seeing profit taking from that group more so than kind of your equal weighted basket, or is that not something to read into?
Well, that's a really interesting question, because on the one hand, you would think that folks